Ladies and gentlemen, welcome to the earnings call breakdown show. I think we're going to be following both Tesla and Google. Okay. Although we do say that we're following just Google here, I also want to see what Tesla's numbers are. I'm not a shareholder anymore, but, and I am a shareholder of Google. So that's really what I'm mainly focused on. But we're going to check in on their earnings as well. Should be a very exciting day. This is, for me at least, the start of the earnings season, the very hard start. Obviously, JP Morgan really opened it up, but now we're starting to see big tech come in. We get to see capital expenditures. We get to see all of this great detail to see insights into all the other stocks that we're holding. So if you're an NVIDIA shareholder, for example, you'll be pretty excited to see if, Tesla is looking at buying more chips, or even Google, especially if their capital expenditures continue to climb above the $17 billion that we saw last quarter, right? So I'll keep an eye out for that. In terms of expectations and everything, we can go through that information as well. But I first want to bring up the actual stocks here. So we're going to be following Google and Tesla for the most part. I'll keep an eye on names like ServiceNow and these sort of names, maybe Chipotle as well. But for the most part, we're going to be facing or looking at Google and Tesla. Tesla right now, going into the close, which is happening about the next 2 minutes or so, will be up about 0.2%, looking like it's relatively flat on the day. And Google also getting in there at a little lower than where they opened up at, which was about $192 a share, now going to be closing the day roughly around $191.50. So we'll see. We'll see. Overall, I'm quite excited. I mean, Google earnings should be very exciting. That's the one that I think, they're going to be on both at the exact same time. So that's the one that I want to listen to. If you guys want to pop into Google stock for a little bit, I mean, that could potentially work as well. Only problem is Google's earnings are at 4:30. So it starts in 30 minutes. Tesla's, I think, is at 5 Eastern Standard Time. Okay. Aside from that, there's not too much that we need to worry about for the next couple minutes. We have about 3 minutes until we actually see Google's earnings. They come in at about 403 on average. And in terms of what we're expecting there, by the way, as I said, I'd give you some of those numbers. Google analysts are now expecting the rate in total revenue has skyrocketed recently. It went from 88 billion to 89 to 91. Now the most recent analyst target across the board is 94 billion, just under that, 93.94 total revenue. That's 9.56, or I'll just make it a little bit more round for you guys. $9.5 billion in YouTube revenue, 13.1 billion in cloud revenue, and roughly about 53 billion in search revenue. That's what people are expecting right now. Okay. We're also expecting that to flow down to about $31 billion of operating income, or about 2.2 billion in cloud operating income. And then for EPS, we got like $2.18 for EPS and $17 billion of free cash flow. You won't need to remember all of those names. I will shout them out as we get the earnings in general. But looks like Google is going up just a little bit into the closing out the day at 191.51 and moving a little bit in the after hours. So, congratulations to everyone. This is the start of the big names in earnings. Tesla closed out the day 332.56. Good luck to all those involved. If you have Tesla shares, I still hope it goes up for you. I am not anti, these stocks running at all. Okay, for retail shareholders, but we will see. Let me make sure that we have Google and Tesla ready to go for whenever the numbers come out. I'm going to have a little running chart to make sure that if it comes out, we get the notifications as early as possible. All right, all right, all right. Okay, so we're going to be listening to the Google call at 4:30. Tesla's report should come out about 5 minutes later than Google, about 4:07-ish, 4:08. So I'll have that ready whenever it comes out as well. For Tesla, people are expecting roughly about 24.8 billion in revenue and 44 cents of EPS. Okay, so that's what we're going to be looking forward to. I am still excited to hear what Elon has to say. I just, you know, want to listen to Google now because it's more impactful on my own portfolio. I know it's not as big of a retail heavy position to listen to, but we'll get the insights. I mean, let's say if Google falls, 12% and Tesla's up 30% once the numbers actually come out. If you guys want, we'll do a poll. We can find out. We'll listen to Tesla's call instead or something like this if it is pumping. But okay, so far, T-Mobile's earnings just came out. $2.84. They were expecting $2.67. So that was a beat by 6%. And revenue came in at just a beat just over 1%. Okay, slight beat on revenue, $21.13 billion. Nothing so far from the other names. I'm going to continue to refresh, make sure that those earnings come out on time. Or whenever they do come out on time, that we actually receive them. Okay. In the after hours right now, Google is running up 0.9%. At one point, it was up 2%. Now it is jumping into negatives. A lot of volatility here. I don't see any numbers just yet. So I'll keep an eye on that. Maybe Bloomberg. Yep, earnings are out for Google. That's a 5% beat on EPS, $2.31, or sorry, $2.20 expected. They saw $2.31 for EPS, and revenue came in at $96.42 billion. $96 billion. Stock is down negative 1% in the after hours, and now, roughly about flat. But holy crap. What we're seeing is essentially a company that's going to be doing $100 billion a quarter. This is a $400 billion annual run rate business for Google coming up. And, the market continues to sell it off. Doesn't think that it's sticky earnings potentially. Who knows exactly what they're thinking, right? I'm still very positive on this earnings. Well, I mean, not on this earnings, on this company. So far, it looks like it's a good quarter. Obviously, Bloomberg has some additional details that I don't quite have just yet, but we'll get that report up as soon as possible. Let's see what else we get here. Only T-Mobile and Google are the ones that I see that are out so far. We can also add T-Mobile there, and then T-Mobile, by the way, up 3% in the after hours. We also have, ServiceNow. Got to throw that up. That's absolutely flat so far as well. And then I think Chipotle. Still only seeing Google and, okay, I have Google Slides now. We will jump back to Tesla's earnings whenever we have those numbers. Stock in the after hours is moving quite a lot for Tesla, but still roughly flat, but a lot of volatility right now. T-Mobile is up 3.8%. Okay. Let's go ahead, take a quick peek-see at Google stock, and then we will return to Tesla, which is up 0.5% right now in the after hours. Wishing retail investors good luck on that name. But yeah, look at this. Year over year up 14%. Okay. I want to see search. I just want to go straight to search to see how much this is going up. Wow. Google search up 12%. Guys, it's dying. Google search is dead, up 12%. Classic death of Google search is up 12%. Still double digits. The street expected, let's see here. The street expected 52.8 on revenue. Here, wait, I gotta shift everything over. Holy crap. I have too many things on my screen. 52.86. We got 54.19. Okay. YouTube was 9.56. And what we ended up seeing was YouTube ads 9.7 instead of 9.5. So those are all looking great to me. Let's go down and find EPS and free cash flow. But before I do, I want to make sure that we're getting Tesla earnings. By the way, Google's now down 2% in the after hours. We'll find out what's going on, but so far it's looking fine. Once the initial shocks of all the earnings come out and we don't see anything like drastic, then we can look through the numbers a bit. Okay, so it's going to be a little frantic while we figure this out. Let's see. Free cash flow, that's why it's dropping. Google's dropping because of free cash flow. Purchase of property and equipment. Guys, how many of you guys are in chat are NVIDIA shareholders? Because I bet you NVIDIA is pumping. Yep. Holy freaking crap. Look at this. Look at this. So yes, they only put out $5 billion in free cash flow. The street was expecting $17 billion. Okay. Some part net cash provided from operating activity is still low regardless of their CapEx, which is their purchases of property and equipment. Okay. $22 billion, up 70% year over year. Guys, who said that the AI hype train is over? Who said? Who said that I'm bearish or not that I'm bearish, that they're bearish or anything along these lines? Good luck. Good luck. Overall, I am a shareholder of Google, okay? But it's a single digit position for me. So, it being down 3%, it does suck. But overall, they are doing the right thing by spending a lot on chips to make sure that they are the provider of artificial intelligence into the future. The existential risk is search, okay? Losing search. What's way to not do search or to not lose in search? Beat OpenAI and the customers that you are losing to, potentially, quote unquote, losing, still up 12% year over year, but is to beat them at their own game. So in order to do that, they need to spend a lot of money. It's just that we're in that rush. Doesn't mean that they spend that money forever, but these days we need to spend. So they're down 2%, NVIDIA up 1%. For me, at least, for my portfolio, greatly pays for the losses that I'm going to see in Google over the next little bit, just based on their large expenses. I think it's the right thing to do. They need to. So let's go back. Let's find... So operating income as well, $33 billion was for the quarter at an operating margin of 40% for Google as well. That I think was a little bit lower than expected. And then EPS, let's try to find this as well. Or unless someone's already posted it, 231 with $2.20 expected. So yeah, that was a double beat from them. It was just free cash flow. That's what it's looking like. Very, very stark contrast from what the market was expecting versus what we actually saw. Search and other revenue was up 12%. Google ads was up 13%. Cloud revenue was up 32%. 32. The estimates were 13.1 billion, and we saw 13.6 billion. And estimates for operating income for Google was 2.2 billion. We saw 2.8. There's nothing bad here. The market can sell it off 2%, whatever. I don't care. I actually think it's going to open up much more positively into the future. Now, let's make sure that we're ready for let's make sure that we are ready for Tesla earnings as well. This is extremely exciting so far. From what I see so far, we haven't gotten anything off Tesla. I can we might have just gotten something. Maybe it's coming through on Bloomberg. No, I have the shareholder deck right now. Initial reactions are positive, as you guys can see. I have the deck here. So Expectations for Tesla were 24.83 billion in revenue and 44 cents of EPS. What I'm seeing here is 22.5 billion in revenue, and then on EPS we saw 40 cents, okay, and 33 cents on a GAAP basis. So looks like a slight double miss, but that's fine. That's fine for Tesla if they can make it up in other areas. So let's see here. Where's automotive margins here? Total gross margin 17.2% on a year-over-year basis. That's down quarter-over-quarter. That's up. 17's not as high as it was before. Total revenue decreased year-over-year due to a decline in vehicle deliveries, lower regulatory credits, reduced average selling price of the vehicles, decline in energy generation and storage revenue, but growth in services and other. Not a great sign. Yeah, energy generation and storage revenue is down. Services revenue is up 17% for Tesla. It looks like a mixed bag from the bulls here. Google starting to recover a little bit from this dip. Honestly, I think Google is the right way to be right now. Holy freaking crap, ladies and gentlemen, thank you so much. Okay, so ServiceNow is in my portfolio as well. Up 9%. That's in the stock draft as well. I'm sorry, ServiceNow, that I had doubted you. And if I could go back, I still would have picked SoFi. But you have to love ServiceNow. Geez, talk about distribution in an AI world. I haven't even taken a look at the numbers. I'm just happy, ladies and gentlemen. Those are real portfolio picks. Google, NVIDIA, ServiceNow, Tesla. I don't have anything right now, but you know, I'll take a position in that someday. I don't want to be out of Tesla my whole life. I will get back in eventually. Let's take a look at deliveries. Total production on vehicles, 410,000. Actually pretty strong compared to what we saw quarter over quarter. And then deliveries, 380,000. Compared to last quarter, it makes it look good. But I mean, honestly, there still is pricing in some brand risk there. Overall, I think that they will be able to recover out of this. But, you know, Tesla needs to stop, or not Tesla, Elon needs to get out of politics and sort of stop getting into that sort of stuff. So we'll see. Automotive, we continue to make progress in preparing the launch for additional models this year. Our entire lineup is better than ever with recent updates. Our ongoing focus on supply chain robustness has enabled a resilient vehicle capacity base despite trade and policy uncertainties. We produced our eighth million vehicle in June. Let's see here. Gigafactory Shanghai remains our main export hub and continues to support greater market expansion. We achieved record delivery volumes in South Korea, Malaysia, the Philippines, and Singapore. In July, we launched the Model Y in India, marking our entry into the world's third largest car market. I remember that they put up their first delivery hub in Mumbai. But let's see what else we can find here. In June, we launched our robotaxi service. Okay. In the first city, Austin, with the safety rider. We will further improve and expand this service, more vehicles covering a larger area, eventually without a safety rider, while testing in other U.S. cities. Freaking bug in my room somehow. Okay. While testing in other U.S. cities in anticipation for additional launches. Our efforts to refine the robotaxi offering in Austin are not local specific and will allow us to scale to other cities quickly with marginal investment. Is that so? So I believe to some degree that is true, but like what happened to the whole them casing out, you know, areas with LiDAR and everything? Because that confused me that they were doing that while expanding in Austin. Does that mean that they won't need to do that in other cities? I don't know enough about it. We've achieved the world's first autonomous delivery to a customer with a new production Model Y, driving itself 30 minutes from the factory across town to its new owner's home, including on highways We expanded AI trading compute with an additional 16,000 H200 GPUs at Gigafactory, Texas, bringing Cortex to a total of 67,000 H100 equivalents. And now, XAI, by the way, just talking about this large purchase here, additional 16,000 H200 GPUs, which they did talk about, I think, on CNBC this quarter as well. But bringing Cortex to a total of 67,000 H100 equivalents, that was the comment that Elon made for XAI, saying they want to get to 50 million H100 equivalents over the next 5 years. Talk about the size of how freaking big that is. Okay. Let's keep an eye on the time. We have 13 minutes. If you guys don't mind, I'm going to stick on, because we're going to listen to the Google call. I want to read a little bit more into Tesla. I apologize. Let me know if this is, if you guys want me to switch back or anything, but it's quite interesting. I want to make sure that I'm reading into what the big bull case is here for Tesla going forward. Energy storage deployment once again increased on a trailing 12-month basis, including record Powerwall deployments for their 5th consecutive quarter. Gross profit increased sequentially and year over year, reaching a record of $846 million. We started deploying mega packs from Mega Factory Shanghai as the ramp continued as planned. Regionalizing energy storage manufacturing capacity is critical for meeting demand given shifting tariff, trade, and fiscal policies globally. Isn't that right? Tesla here in the markets staying relatively flat, up 2%, going between 0.2 to 0.8% on expectations. Google currently down 0.8%. ServiceNow up 7%. NVIDIA up 6.7% on all of this news. T-Mobile, honestly, one of the sneaky wins. Sometimes you don't need to pick a generational, tech company. You just need to buy a good value play, up 7.5% on these earnings. Pretty phenomenal. Okay. Let's see here. Oh, actually, let me quickly bring that back. Tesla's starting to improve on the stock price here, but I want to make sure that I bring you guys some of the news on ServiceNow. So ServiceNow up 7% currently. On an earnings per share basis, we saw $4.09. That was over the expected $3.57, beating by 15%. And revenue also beat by 3% at $3.215 billion. Revenue is up 22% year over year, and EPS up 31% year over year, both up quarter over quarter as well. Okay. Let's see here. Another name that we didn't have on the list, Chipotle, down 9%. Okay. EPS came in at 33 cents, which was the expectation, and revenue came in missing by 2%. So EPS was down 3% year over year, revenue up only 3%, and falling even further. Holy crap, ladies and gentlemen. Looking at nearly down 10% here, almost 9.7%. Oh my gosh, I think it just did fall to negative 10. Yeah, negative 10% on Chipotle right now. Wow. NVIDIA still up. ServiceNow up 7%. T-Mobile up 6.5%. Tesla just holding its price 0.6%. Google down 1.4%. Okay. Let's take a look at the Tesla outlook really quickly. Boom. It is so for outlook, it is difficult to measure the impact of shifting global trade and fiscal policies on an automotive and energy supply chains, our cost structure, and demand for durable goods and related services. While we are making prudent investments that will set us up for both our vehicle and energy business for growth, the actual results will depend on a variety of factors, including the broader macroeconomic environment, the rate of acceleration of our autonomy effects, and production ramps at our factories. We have sufficient liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses. Furthermore, we will manage the business such that we maintain a strong balance sheet during these uncertain periods. While we continue to execute on innovation to reduce the cost of manufacturing and operation, over time, we expect that our hardware-related profits to be accompanied by an acceleration of AI software in fleet-based products. That is not a profit outlook that I was expecting. And then for product, our focus remains on the prudently growing our vehicle volumes in a capex efficient manner by using our existing product production capacity before building new lines. Plans for new vehicles will launch in 2025 remain on track, including initial production for more affordable models in H1, including initial production of affordable model in H1 of 2025. I'm surprised there's no real leaks. I mean, we've seen pictures and stuff like this from drones and stuff that are flying over factories, but I'm surprised we haven't seen anything more than that, and they've actually been able to keep it under wraps. But to be fair, I mean, the Cybertruck was kept under wraps until it literally rolled on stage. So maybe this is true. Our purpose-built robotaxi product, Cybercab, will continue to pursue a revolutionary unboxed manufacturing strategy and scheduled for volume production starting in 2026. Great. Let's see if there's anything here that we haven't seen already. This is their new diner. Yeah. A whole lot of diner. Nice. Key metrics on vehicle deliveries. Yeah. Yep. Year over year declines. Looks like it might even be a decline from Q1 of 2024, which was also exceptionally low during that period. Free cash flow was, I'd like to see CapEx there. I wonder where it's written. We can look for it here in a sec. And net income just coming above $1.2 billion. We can find that as well, but that's a lot better than the $400 million that they did last quarter. That's for sure. Vehicle deliveries. Yeah. Yep. Honestly, I'm super happy with my decision to sell out of Tesla. Not that I'm stating that anything will go wrong with Tesla. I think that there will be a period where, they get back into growth mode. But right now, it seems like a calm before the storm. And, we don't need to essentially rush to get entry into that company right now. I'd so much rather pour all that money into NVIDIA. And like you're seeing in all of these companies, the only problem that a lot of these analysts are going to pick them apart for, like you're seeing in Google here, is $22 billion, a 70% increase in capital expenditures. 70%. Ladies and gentlemen, what do you think is going to happen in Q3 whenever, we're lower on purchases of property and equipment quarter over quarter, but the next quarter will probably be higher in Q3 for spend. Like we're talking about, are we going to get to 90% growth rates by, Q4 of 2024? This is an insane ramp. Insane. Wait, I don't know if you guys are seeing this, but this is what they're spending. And not all on chips. This is all property and equipment, but this does factor in NVIDIA chips and the like. Okay. 13 billion. That's a ton. 13 billion. No big difference. Okay. Analysts loved that. 14 billion. A $1.2 billion increase. 17 billion. Nearly a $3 billion increase. 17 to 22.5. Holy crap, we're talking about over $5 billion added that are going towards, purchase of property and equipment. Now, if that was accompanied with similar, net cash provided by operating activities, then the market would not have a problem here. Okay, the fact that this was lower, this was much higher, leading to $5 billion of free cash flow, market's not happy. That's why we're seeing a little bit of a down day. But the truth is, this is what we want to see from all the Mag 7 companies. all the large tech companies, okay? We want to see it from Oracle, from a lot of the Chinese names as well. This is just what you want to see across the board. Look at this, 43% back to 70%. Just crazy, ladies and gentlemen. Google Cloud's firing year-over-year growth has accelerated back into positive 30%. So I think last quarter as well was 29%, if not 30%. So re-acceleration into 32%, amazing. I think Microsoft leading the charge last quarter. I think it was 34%. We'll see if they can hold that up. And on an operating margin, this is the highest they've ever seen. I think last quarter was 17%. We can look deeper into that after the call. By the way, the call starts in 2 minutes, ladies and gentlemen. Okay? 2 minutes. A lot of people talking Broadcom in the chat. 100%, they're going to benefit a lot from this as well. Let's check Broadcom stock. I'm sure they are going to be, up 2.75%. You have to love information knowing that they are spending a ton, not only for NVIDIA chips and other chip manufacturers, but also for their own TPUs, the tensor processing units. Holy. I'm very happy. I'm super happy with these Alphabet earnings, okay? I know that Roy is not as positive. He was expecting that potentially this quarter or next, I think he's going to start seeing some real depreciation in search in terms of the quality of their growth and how well that's going. But the truth is, if we keep pulling out, 12% growth rates, there's no problem here. There's zero problem. That's just fantastic. Okay. Did we end up seeing total operating income? I think it was down just a little bit, wasn't it? Let's switch over really quick just before the earnings start, because I want to see what search operating. Yeah. Google services went from 29 billion last year to 33 this quarter. So it's up, but what was it last quarter? I don't remember. 30 billion, 30.6. So we went from 30.6 to 33 billion. This is a full-on growing business, ladies and gentlemen. There's nothing to hate here. Let's take a look here. Other bets, 373 million. I was expecting that to be a little bit higher. Potentially, that won't be the case, but yeah. Search doing its thing. Google's about to be a $10 billion run rate business every single quarter. That's, and that, by the way, that's YouTube ads. If I'm not misunderstood, that doesn't include subscriptions, Google subscriptions, which includes, YouTube Premium and all of those things, which, adds on to YouTube's total case here. But let's make sure we have earnings, because we're about to switch over here in just 1 minute. Number of employees actually took quite the step up year over year. I'd love to check what that was quarter over quarter. We still have some time. I'm listening to the earnings call right now. Total number of employees, that went up by like 1,500 new employees. Even if Microsoft is poaching some of their top guys, those are only just a few guys, okay? Okay, looks like we're starting to get into... No, I know it includes Google One and everything, but we can't not factor in... Okay, we're going into the call. Ladies and gentlemen, enjoy.
Only mode. After the speaker presentation, there will be a question and answer session. To ask a question during the session, you will need to press *1 on your telephone. I would now like to hand the conference over to your speaker today, Jim Friedland, Head of Investor Relations. Please go ahead.
Thank you. Good afternoon, everyone, and welcome to Alphabet's second quarter 2025 earnings conference call. With us today are Sundar Pichai, Philip Schindler, and Anat Ashkenazi. Now, I'll quickly cover the safe harbor. Some of the statements that we make today regarding our business, operations, and financial performance may be considered forward-looking. Such statements are based on current expectations and assumptions that are subject to a number of risks and uncertainties. Actual results could differ materially. Please refer to our Forms 10-K and 10-Q, including the risk factors. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release, which is distributed and available to the public through our investor relations website located at abc.xyz/investor. Our comments will be on year-over-year comparisons unless we state otherwise. And now, I'll turn the call over to Sundar.
Thanks, Jim. Good afternoon, everyone. Q2 was a standout quarter for us with robust growth across the company. As you saw at I/O, we are leading at the frontier of AI and shipping at an incredible pace. AI is positively impacting every part of the business, driving strong momentum. This quarter, search delivered double-digit revenue growth. Our new search features continue to perform well. AI Mode has launched in the US and India and is going well, while AI Overviews now has over 2 billion monthly users across more than 200 countries and territories and 40 languages. I'll give some more details on search in a moment. We continue to see strong performance in YouTube as well as subscriptions, reflecting great momentum across these high-growth businesses. In the US, Shorts now earn as much revenue per watch hour as traditional in-stream on YouTube. And in some countries, it now even exceeds in-stream's rate. Cloud had another great quarter of strong growth in revenues, backlog, and profitability. Its annual revenue run rate is now more than $50 billion. We are seeing significant demand for our comprehensive AI product portfolio. Of course, this is all possible because of the long-term investments we have made in our differentiated full-stack approach to AI. This spans AI infrastructure, world-class research, models and tooling, and our products and platforms that brings AI to people all over the world. I'll briefly touch on the AI stack before turning to quarterly highlights. First, AI infrastructure. We operate the leading global network of AI-optimized data centers and cloud regions. We also offer the industry's widest range of TPUs and GPUs, along with storage and software built on top. That's why nearly all Gen AI unicorns use Google Cloud. And it's why a growing number, including leading AI research labs like Safe Superintelligence and Physical Intelligence, use TPUs specifically. Our AI infrastructure investments are crucial to meeting the growth and demand from cloud customers. Next, world-class AI research, including models and tooling. We continue to expand our Gemini 2.5 family of hybrid reasoning models, which provide industry-leading performance in nearly every major benchmark. In addition to improving our popular workhorse model Flash, we debuted an extremely fast Flashlight version. We achieved gold medal level performance in the International Math Olympiad using an advanced version of Gemini with DeepThink. We can't wait to bring DeepThink to users soon. We have some of the best models available today at every price point. Our 2.5 models have been a catalyst for growth, and 9 million developers have now built with Gemini. I also want to mention VO3, our state-of-the-art video generation model. It's been a viral hit, with people sharing clips created in the Gemini app and with our new AI filmmaking tool, Flow. Since May, over 70 million videos have been generated using VO3. And we recently introduced a feature in the Gemini app to turn photos into videos, which people absolutely love. It's also rolling out to Google Photos users starting today. Third, our products and platforms. We are bringing AI to all our users and partners through surfaces like Workspace, Chrome, and more. The growth in usage has been incredible. At I/O in May, we announced that we processed 480 trillion monthly tokens across our surfaces. Since then, we have doubled that number, now processing over 980 trillion monthly tokens, a remarkable increase. The Gemini app now has more than 450 million monthly active users, and we continue to see strong growth and engagement, with daily requests growing over 50% from Q1. In June alone, over 50 million people used AI-powered meeting notes in Google Meet. And powered by VO3, our new short video product in Workspace called Google Vets reached nearly 1 million monthly active users. This month at Samsung Galaxy Unpacked, we announced new Android and AI features that are available on Samsung's latest devices. And we are really pleased with the growth in subscriptions, which got a boost from our Google AI Pro and Ultra plans. Now, some key highlights from Search, Cloud, YouTube, and Waymo for the quarter. First up, this is an incredibly exciting moment for Search. We see AI powering an expansion in how people are searching for and accessing information, unlocking completely new kinds of questions you can ask Google. Overall queries and commercial queries on Search continue to grow year over year. And our new AI experiences significantly contributed to this increase in usage. We are also seeing that our AI features cause users to search more as they learn that search can meet more of their needs. That's especially true for younger users. Let me go deeper on our new search experiences. We know how popular AI overviews are because they are now driving over 10% more queries globally for the types of queries that show them. And this growth continues to increase over time. AI overviews are now powered by Gemini 2.5, delivering the fastest AI responses in the industry. We also saw strong growth in the use of multimodal search, particularly the combination of Lens or Circle to Search together with AI overviews. This growth was most pronounced among younger users. Our new end-to-end AI search experience, AI Mode, continues to receive very positive feedback, particularly for longer and more complex questions. It's still rolling out, but already has over 100 million monthly active users in the US and India. We plan to keep enhancing the AI Mode experience for users by shipping great features fast. That includes our advanced research tool, Deep Search, and more personalized responses. Next, Google Cloud. We see strong customer demand driven by our product differentiation and our comprehensive AI product portfolio. 4 stats show this. 1, the number of deals over $250 million, doubling year over year. 2, in the first half of 2025, we signed the same number of deals over $1 billion that we did in all of 2024. 3, the number of new GCP customers increased by nearly 28% quarter over quarter. 4, more than 85,000 enterprises, including LVMH, Salesforce, and Singapore's DBS Bank now build with Gemini, driving a 35x growth in Gemini usage year over year. Our models are served on our AI infrastructure, which offers industry-leading performance and cost efficiency for both training and inference. Along with our AI accelerators, we introduced new innovations in storage, including Anywhere Cache, which improves inference latency by up to 70%, and Rapid Storage, which delivers a 5x improvement in latency compared to leading hyperscalers. In addition, we have optimized AI software packages, including PyTorch and JAX, with full open source supports for various AI training and serving demands. We've also integrated AI agents deeply into each of our cloud products. Wayfair is leveraging our databases integrated with AI to streamline data pipelines and deliver more personalized customer experiences. Mattel is leveraging our Gemini-powered data agents and BigQuery to review and act on product feedback more quickly. Target is using our Gemini-powered threat intelligence and security operations agents to improve cybersecurity. Capgemini is utilizing our AI software engineering agents to deliver higher quality software faster by automating tasks from code generation to testing. And BBVA says Gemini in Google Workspace is saving employees nearly 3 hours per week by automating repetitive tasks. It's now rolling it out to 100,000 employees globally. We are also focused on building a flourishing AI agent ecosystem. We introduced an open source agent development kit, which now has over 1 million downloads in less than 4 months. We also introduced Agent Space, an open and interoperable enterprise chat, search, and agent platform. Gordon Food Service is bringing Agent Space to its US employees, which is enabling better, more efficient decision-making. And over 1 million subscriptions have been booked for Agent Space ahead of its general availability. Turning now to YouTube. Nielsen data shows YouTube has led US streaming watch time for over 2 years. A generation that grew up with YouTube on their devices is now increasingly watching their favorite creators and content on their televisions. That includes billions of sports fans too. Globally, they consume more than 40 billion hours of sports content on YouTube annually. And in September, we'll stream the NFL's first Friday game of the season live from Brazil. From sports to shorts, we now average over 200 billion daily views on YouTube Shorts. AI is helping improve our recommendations and auto dubbing, which translates to better returns for creators and brands by dramatically increasing the potential audiences they can reach. And today we began rolling out a whole raft of new AI tools for creators on YouTube Shorts. Finally, YouTube continues to diversify its subscription options, recently expanding its premium light offerings to 15 new countries with more to come. And lastly, Waymo continues to scale and expand to safely serve more riders in more places. Last month, Waymo launched in Atlanta, more than doubled its Austin service territory, and expanded its Los Angeles and San Francisco Bay Area territories by approximately 50%. Waymo also launched teen accounts, starting with riders aged 14 to 17 in Phoenix. Overall, great momentum here. The Waymo driver has now autonomously driven over 100 million miles on public roads. And the team is testing across more than 10 cities this year, including New York and Philadelphia. We hope to serve riders in all 10 in the future. As I said, a standout quarter. A big thank you as always to our employees and partners for an amazing Q2. Philip, over to you.
Thanks, Sundar, and hello, everyone. I'll quickly cover performance for Google services for the quarter, then structure the rest of my remarks around the great progress we're delivering across search, ads, YouTube, and partnerships. Google services revenues were $83 billion for the quarter, up 12% year-on-year, driven by strong growth in search and YouTube, partially offset by year-on-year decline in network revenues. To add some further color to our results, the 12% increase in search and other revenues was led by growth across all verticals, with the largest contributions from retail and financial services. YouTube saw similar performance across verticals. Its 13% growth in advertising revenues was driven by direct response, followed by brand. Starting with search and other revenues, which delivered over $54 billion in revenue for the quarter. Shifts like AI are what propels our industry forward. Gemini's native multimodality is helping bring the offline audio and visual world back into the online world, creating a number of opportunities for search. Let me share a few examples. Take visual queries. Google Lens searches are one of the fastest growing query types on search and grew 70% since this time last year. The majority of Lens searches are incremental, and we're seeing healthy growth for shopping queries using Lens. And you can obviously take this to the next level by moving from image to video-based capabilities like Search Live. And then there's Circle to Search, which is now on over 300 million Android devices. We've been adding capabilities to help people explore complex topics and ask follow-up questions without switching apps. For example, gamers can now use Circle to Search while playing mobile games to see an AI overview or answers. And just last week, we brought a new agentic capability directly into search for all US users with AI-powered calling to local businesses. Finally, shopping, where in Q2 we introduced a virtual try-on experience for Search Labs users in the US. Now people can try billions of clothing products on themselves virtually. Early results and engagement have been extremely positive, particularly with Gen Z users, and we'll be bringing this functionality to all US users imminently. All these innovations are opening up completely new ways for people to use technology, bringing the offline world into the online world in ways that simply have not been possible before. Add in our amazing AI translation capabilities and just imagine the possibilities. People can access more content in the language, and businesses, large and small, international or local, can reach even more customers. I'm excited about how all of these elements will come together and the opportunities ahead of us in search. Moving to ads, where our strategy to reinvent the entire marketing process with AI is delivering value for our customers and our business. Last quarter, we introduced AI Max in Search, a new suite of AI-powered features in existing search campaigns. Advertisers that activate AI Max in Search campaigns typically see 14% more conversions. On media buying, smart bidding exploration, the biggest update to bidding strategy in a decade, brings better performance to advertisers by allowing them to bid on less obvious but potentially higher value queries more often. Campaigns using smart bidding exploration see a 19% increase in conversions on average. Demand gen continues to drive revenue growth and deliver measurable impact for our customers. As an example, Depop, Etsy's resale clothing marketplace, used a Shorts-only demand gen campaign to drive new customers to the site. Shorts drove 80% higher brand lift and double click-through rates versus benchmarks. On creatives, we launched Asset Studio, using our latest models to help businesses, large and small, generate creative assets. Small businesses benefit from top quality assets and deployment scaling capabilities, but larger businesses can go faster from proof of concept to launch and resize at lower costs. Over 2 million advertisers now use Google's AI-powered asset generation tools to run ads, a 50% increase on this time last year. Turning to YouTube, where we saw continued strong revenue growth, driven by direct response followed by brand. YouTube creators are connected to the global zeitgeist and trusted by their audiences like no others. As part of Brand Connect, we launched Creator Partnership Hub, which allows brands to more easily work with the right creators and tap into cultural moments. We introduced Veo 3, photo to video, and generative effects to Shorts, making content creation easier and offering unexplored avenues for creativity. We're seeing both the volume and the price of ads in Shorts increase, particularly in developed markets. The feed-based nature of the product allows for more ad opportunities on average, and this growth is further supported by ad formats native to Shorts, AI-powered ad creative resizing tools, improved ad targeting, and the rise in viewer engagement. McDonald's USA harnessed the influence of YouTube creators to ignite awareness for the Minecraft movie meal. It leveraged YouTube Shorts partnership ads to increase its reach, generating a 3.3 times higher view-through rate than the industry benchmark. Finally, on CTV, where the momentum continues. According to the Gauge report by Nielsen, YouTube has been #1 in streaming watch time in the US for more than 2 years, hitting a record high of 12.8% of total TV viewing in June 2025. In the past 12 months, YouTube ads viewed on CTV screens drove over 1 billion conversions. We saw strong growth in retail thanks to CTV shopping ads, which allows viewers to shop directly via QR codes, helping us leverage direct marketing opportunities. As always, I'll wrap up with the momentum we're seeing in partnerships, where customers increasingly recognize the strength and breadth of Google's ability to help them transform their business with AI. For instance, a new partnership with PayPal will improve the digital commerce experience for their merchants and customers. PayPal will expand its Google Cloud adoption for AI-driven recommendations, transaction processing, and enhanced security. The partnership also broadens the availability and functionality of PayPal's payment services and capabilities across a range of Google products. In closing, I'd like to thank Googlers everywhere for their contributions and commitment to our success, and to our customers and partners for their continued trust. Anat, over to you.
Thank you, Philip. My comments will focus on year-over-year comparisons for the second quarter, unless I state otherwise. I will start with results at the Alphabet level, and will then cover our segment results. I'll end with some commentary on our outlook for the second half of 2025. We had another solid quarter in Q2. Consolidated revenue of $96.4 billion increased by 14%, or 13% in constant currency. Search and YouTube advertising, subscription platforms and devices, and Google Cloud each had double-digit revenue growth this quarter, reflecting strong momentum across the business. Total cost of revenue was $39 billion, up 10%. Tech was $14.7 billion, up 10%, and other costs of revenue was $24.3 billion, up 10%, with the increase primarily driven by content acquisition costs, largely for YouTube, followed by depreciation. Total operating expenses increased 20% to $26.1 billion. The biggest driver of growth was expense for legal and other matters, which reflected the impact of $1.4 billion charge related to a settlement in principle of certain legal matters. R&D investments increased by 16%, primarily driven by increases in compensation and depreciation expenses. Sales and marketing expenses increased 5%, primarily reflecting an increase in advertising and promotional expenses. Operating income increased 14% this quarter to $31.3 billion, and operating margin was 32.4%. Operating margin benefited from strong revenue growth and continued efficiencies in our expense base, partially offset by the legal charge I mentioned earlier, and a significant increase in depreciation expense. Net income increased 19% to $28.2 billion, and earnings per share increased 22% to $2.31. We generated free cash flow of $5.3 billion in the second quarter and $66.7 billion for the trailing 12 months. Free cash flow in the second quarter was affected by a sizable sequential increase in CapEx and cash tax payments as we make federal tax payments in the second quarter for both Q1 and Q2. We ended the quarter with $95 billion in cash and marketable securities. Turning to segment results, Google Services revenues increased 12% to $82.5 billion, reflecting strength in Google Search and YouTube advertising and subscriptions. Google Search and other revenues increased by 12% to $54.2 billion. Search and other revenues delivered growth across all verticals, with the largest contributions coming from retail and financial services. YouTube advertising revenues increased 13% to $9.8 billion, driven by direct response advertising, followed by brand. Network advertising revenue of $7.4 billion were down 1%. Subscription, platforms, and devices revenues increased 20% to $11.2 billion, primarily reflecting growth in subscription revenues. This growth was driven by YouTube subscription offerings, followed by Google One, with growth in paid subscriptions being the biggest driver of revenue growth. Google Service operating income increased 11% to $33.1 billion. Operating margin was flat year-on-year at 40.1%, as healthy revenue growth and continued efficiency in our expense base were partially offset by the legal charge I mentioned earlier. Turning to the Google Cloud segment, which delivered very strong results this quarter, revenues increased by 32% to $13.6 billion in the second quarter, reflecting growth in GCP across core and AI products at the rate that was much higher than Cloud's overall revenue growth, and growth in Google Workspace, driven by an increase in average revenue per seat and the number of seats. Google Cloud operating income increased to $2.8 billion, and operating margin increased from 11.3% to 20.7%. The expansion in cloud operating margin was driven by strong revenue performance and continued efficiencies in our expense base, partially offset by higher technical infrastructure usage costs, which includes the associated depreciation. As we ramp our AI investments, we continue to focus on driving improvements in productivity and efficiency to offset growth in technical infrastructure-related expenses, particularly from higher depreciation. Google Cloud backlog increased 18% sequentially in Q2 and 38% year-over-year, reaching $106 billion at the end of the quarter. This growth was driven by strong demand for our products and services from both new and existing customers. As Sundar mentioned, we have signed multiple billion-dollar-plus deals in the first half of the year. As to our other bets, in the second quarter, revenue were $373 million, and operating loss was $1.2 billion. Within other bets, we're allocating more resources to businesses like Waymo, where we see opportunities to create additional value. With respect to CapEx, in the second quarter, our CapEx was $22.4 billion. The vast majority of our CapEx was invested in technical infrastructure, with approximately two-thirds of investments in servers and one-third in data centers and networking equipment. In Q2, we returned capital to shareholders through repurchase of stock of $13.6 billion and dividend payments of $2.5 billion. Turning to our outlook, I would like to provide some commentary on several factors that will impact our business performance in the second half of 2025, as well as an updated outlook for full-year CapEx. First, in terms of revenues, we're pleased with the overall momentum we're seeing across the business. At current spot rates, we could see a tailwind to our revenue in Q3. However, volatility in exchange rates could affect the impact of FX on Q3 revenue. As for our segments, in Google Services, advertising revenues in the second half of 2025 will be affected by the following: the continued lapping of the strength we experienced in financial service verticals throughout 2024, and year-over-year comparisons will be negatively impacted by the strong spend on U.S. election in the second half of 2024, particularly on YouTube. In cloud, as I mentioned, the demand for our products is high, as evidenced by the continued revenue growth and the cloud backlog of $106 billion. While we have been working hard to increase capacity and have improved the pace of server deployment, we expect to remain in a tight demand-supply environment going into 2026. Moving to investments, given the strong demand for our cloud products and services, we now expect to invest approximately $85 billion in CapEx in 2025, up from a previous estimate of $75 billion. Our updated outlook reflects additional investment in servers, the timing of delivery of servers, and an acceleration in the pace of data center construction, primarily to meet cloud customer demand. Looking out to 2026, we expect a further increase in CapEx due to the demand we're seeing from customers, as well as growth opportunities across the company. We will provide more details on the 2026 CapEx outlook on a future earnings call. In terms of expenses, first, as I mentioned on our previous earnings call, the significant increase in our investments in CapEx over the past few years will continue to put pressure on the P&L, primarily in the form of higher depreciation. In the second quarter, depreciation increased $1.3 billion year-over-year to $5 billion, reflecting a growth rate of 35%. Given the recent increase in CapEx investments, we expect the growth rate in depreciation to accelerate further in Q3. Second, as we've previously said, we expect some headcount growth in 2025 in key investment areas. In the third quarter, we expect a sequential increase in total headcount additions, due in part to the hiring of new graduates. And third, Q3 will reflect the expense associated with the upcoming August launch of the new Pixel family of products. In conclusion, as you heard from Sundar and Philip, we're pleased with the momentum in the business and excited about the pace of innovation. Our full-stack approach, which combines AI infrastructure, AI research, and AI products and platforms, position us well to deliver new products and services across the company. We're seeing great momentum with our AI efforts, as demonstrated by the increase in cumulative token processed. Search revenues are seeing healthy growth, with features like AI overviews, AI mode, and lens offering new ways for users to access information. Cloud has reached an annual revenue run rate of more than $50 billion and is delivering margin expansion while continuing to invest to meet customer demand. And YouTube has expanded its addressable market by building new services like Shorts, which now averages over 200 billion daily views. We're excited to see the value our products and services are bringing to customers and partners around the globe. Now I'll turn the call over to the operator, and Sundar and Philip and I will take your questions.
Thank you. As a reminder, to ask a question, you will need to press star one on your telephone. To prevent any background noise, we ask that you please mute your line once your question has been stated. Your first question comes from Eric Sheridan with Goldman Sachs. Your line is now open.
Thank you so much for taking the question. Maybe one for Sundar and one for Philip. Sundar, when you think about the journey you're on with respect to the evolution of products and platforms, how do you think about some of the implications of changed consumer behavior and how investors should think about that from the volume perspective versus the monetization perspective? Because I think there's a lot of longstanding dynamics out there about clicks and click monetization that might be very different when you look out over the next 3 to 5 years. And Philip, when you think about the evolution of YouTube, you made a number of comments there about subscription revenue. I'm just curious how you think about the mix of advertising versus subscription and what some of your key learnings might have been as the subscription side of the business continues to scale. Thank you.
Thanks, Eric. Appreciate the question. I do think looking ahead, based on everything we are seeing, it's people are excited about AI. They are adopting it well across our products. For me, just seeing multimodality, how people have modified their behavior to include images, both through Lens and Circle to Search, seamlessly as part of interacting with Google. Our early indications that people are going to be adopting through these moments very, very well. I think I'm trying to understand your question in terms of about clicks and click monetization. Maybe that's something Philip can touch on. But overall, we expect as we build out our organic experiences, we have a good understanding of how to continue training on monetization, so that'll work well with the organic experiences. But we will lead with the organic experience. So in terms of newer surfaces like Gemini app, etc., we'll focus on the organic experience for the near term. But just like we are doing with AI overviews and with AI mode over time, we'll be able to bring very, very good commercial experiences there as well. And we think people will adapt to them as they've always done. Maybe Philip can add more. Philip?
Yeah. So on your question on YouTube subscriptions versus ads, look, I mean, we love our ads business. We love our subscription business. YouTube subscriptions are an increasingly important for YouTube. We'll definitely continue our long-term focus here. We had a strong growth across YouTube subscription products, which includes, just to be clear, YouTube TV, YouTube Music, and Premium. And I think one common theme for our subscription services in general is offering viewers more choice here. We also have a very deep understanding of the monetization side here. Where are we monetizing more with ads? Where can we potentially monetize more with subscriptions? So I think we will continue this as a double tier strategy actively going forward.
Thank you.
Our next question comes from Doug Anmuth with JP Morgan. Your line is now open.
Thanks so much for taking the questions. One for Sundar, one for Philip. Sundar, can you just talk about how you're thinking about your current access to compute? Even as you spend $10 billion more this year in CapEx, you also said that you're still in a tight supply environment, so you're just trying to marry those. And then Phil, perhaps on search growth, can you talk a little bit about paid click and pricing growth just within the 12% search growth and how we should think about volume versus monetization trends going forward? Thanks.
Doug, thanks. On the CapEx stuff, obviously we are seeing strong momentum across our portfolio, and especially in cloud. You are right; it's a tight supply environment, and we are investing more to expand, but there is obviously a time delay between this additional investment will play out in future years, and so that's why both of them are true at the same time. But we are planning ahead and we are investing, and but overall it's exciting to see the traction, particularly in cloud. I think the comprehensiveness of our AI portfolio, the breadth of our offerings, both providing our models on GPUs and TPUs for our customers, all of that has been really driving demand, and so we are investing to match up to it.
And on your paid click question, look, to be very clear, I think we said this before, we manage the business to drive great outcomes for our users and an attractive ROI for our advertisers. We actually don't manage to pay clicks and CPC targets. Some of the product and policy changes we make actually drive better monetization at the expense of paid clicks. You will actually see in the 10Q, paid clicks were up 4% year on year. But a number of factors affect these metrics from quarter to quarter, such as a few examples: advertiser spending, product changes, policy changes, user engagement, and so on. So it's really important when it comes to paid clicks and CPCs to avoid drawing overly broad conclusions solely based on these metrics.
Thank you both.
Our next question comes from Brian Nowak with Morgan Stanley. Your line is now open.
Thanks for taking my questions. I have two. First one, Sundar, there's a lot of discussion about agentic search for commercial activities and agents that can be broadly deployed. Maybe could you just, from a technology perspective, when you sit down with the engineering teams working on some of these new agentic capabilities that could come, what are some of the predominant technological hurdles that you think need to be cleared in order to launch scalable agents for commercial queries is the first one. Then the second one, I think in the past you've updated us on stats on sources of internal efficiency you've seen from Gen AI enabled capabilities. Any updates there, and then any sort of learnings on friction points that also need to be overcome for some of these internal tools with Gen AI? Thanks.
Thanks, Brian. Let me start with the first one on agentic capabilities. Look, overall, we are definitely, in many ways, when we built 2.5, our series of 2.5 models, particularly with Pro, etc., it's the direction where we are investing the most. There's definitely exciting progress, including in the models we haven't fully released yet. And the main gaps we are all trying to do is, you're obviously chaining a sequence of events, and so being able to do it reliably, the latency compounds, the cost compounds, and being able to do it reliably in a way for the users, all of this comes together. In each of this, we are making progress, and it all needs to kind of hang together. The good news is we are making robust progress. We think we are at the frontier there. And in all of these areas, when you look back in a 12-month basis, you end up making the models much more efficient for any given capability. So the forward-looking trajectory, I think, will really unlock these agentic experiences. We see the potential. We're able to do them, but they're a bit slow and costly and takes time and sometimes are brittle, right? But we're making progress on all of that. And I think that's what will really unlock. And I expect 2026 to be the year in which people kind of use agentic experiences more broadly, right? And so it's an exciting opportunity ahead. On the second part, I think when you say sources of internalization, I presume you're talking about how we are using all of this internally. Again, given you asked a question about agents, we are now beginning to roll out agentic coding journeys for our software engineers within the company. And it's been exciting to see just over the last few months, particularly over the last few weeks, people are definitely doing more agentic workflows in software engineering as well internally. And that's a good example of the kind of the same experiences a few months ago had a lot of friction points, but we are overcoming it, and people are beginning to use internally on the coding side, as well as in certain other areas of the company as well. So exciting progress. I expect it to be an active area where we will roll out journeys for our users as well. So look forward to it.
Thanks, Sundar. That's great.
Our next question comes from Michael Nathanson with MoffettNathanson. Your line is now open.
Thanks. Sundar, I have two for you. At I/O, you announced a partnership with Warby Parker to develop glasses. So I wonder if you share your view of how important a cycle of new devices will be to further scale AI, and do you envision a world in which the mobile phone is no longer central to our consumer experience? That's one. And secondly, how does Google Search with AI mode usage differ versus Gemini standalone apps? I'm wondering, are you seeing any differences in usage or the types of consumers who go to the app versus who go to traditional search with AI? Thanks.
Thanks, Michael. On the first thing, look, I think anytime I/O changes, you can drive new experiences, including on hardware experiences too. So I think AI will particularly enable. We've long had the promise of glasses and other form factors, but I think AI will spur a whole new wave of innovation there. We are super excited about our investment in glasses, and found the experiences have taken a dramatic step up compared to the last iteration. So I think it'll be an exciting new emerging category, but I still expect phones to be at the center of the experience, for the next 2 to 3 years at least. And so I still think that's going to be phones would continue to be at the center of the consumer experience. But we are excited about the emerging categories as well. On your second question on AI mode versus Gemini standalone app, broadly, there are some use cases where you can get a great experience in both places. But there are use cases which are very specific. I think where the queries are, information oriented, but people really want to rely on the information, but have the full power of AI. I think AI mode really shines in that. You can go there and it's backed up. The Gemini models are using search deeply as a tool. And so it's all grounded in that search experience. And I think users are responding very positively to it. And whereas in the Gemini standalone app, you see everything from, people can have a long conversational chat just trying to pass time, right? And in the Gemini app, you've seen early cases where people may get into it, in a therapy-like experience, right? So these are all emerging experiences of what people do. And I think this is why I'm glad we have both surfaces and we can innovate in both of these areas. And of course, there'll be areas which will be commonly served by both applications. And over time, I think we can make the experience more seamless for our users.
Thanks, Sundar.
Our next question comes from Mark Shmulik with Bernstein. Your line is now open.
Yes, thanks for taking the question. Sundar, it seems there's almost like a daily news report about, the AI talent war and high-profile folks moving around, which is kind of like your perspective and how you think Google's been doing it, both kind of attracting and retaining key AI talent. And along the similar lines, how do we think about AI-related resourcing costs alongside kind of the step up in capital investments required to go build for AI? Thank you.
Mark, on the first question, look, I think we've gone through these moments before. We've obviously always deeply invested in talent, including in AI talent, for well over a decade now, and I think we have an extraordinary both breadth and depth of the talent. In my experience, the top people look for a combination of they want to really be at the frontier driving progress, and so the mission and how state of the art your workers matters. So that's super important to them. Access to compute resources and access to your peers, right? Working with the best people in the industry, and it's a combination of all of that and using it to drive impact. And I think we are pretty competitive on all those fronts. And through this moment, we continue to. I look at both our retention metrics as well as the new talent coming in, and both are healthy. I do know individual cases can make headlines, but when we look at numbers deeply, I think we are doing very well through this moment. And we'll continue investing in the people and the talent and the compute needed to make sure we are set up well for the opportunity ahead. And maybe I'll pass it on to Anat.
Yeah, now the question on how we integrate this into our overall cost structure, and I've mentioned before, having the benefit of having the full stack includes research, which is our people, and one of our most critical resources. So we make sure that we invest appropriately to have the best, brightest minds in the industry sitting here at Google and advancing our innovation to customers. It is part of what you're seeing now in our operating expense line across the organization, but we're also working hard to offset not just growth and investment across the business, but also to ensure that we can allocate resources appropriately. So Sundar mentioned earlier the use of AI tools within the company. So that's another area where we can drive efficiency across the business, is to use these tools internally in terms of how we run the organizations. And then we're continuing on the same efforts that I've talked about before with regards to running the company with a high level of discipline and execution and driving efficiency across the business.
Our next question comes from Ross Sandler with Barclays. Your line is now open.
Great. If I can ask two, that'd be great. So the first one's on search click-through rates as a driver of monetization. So you guys have done a great job over the past decade of driving better ad relevancy and higher click-through rates in search. Just curious, as we look forward and we see lower ad impressions per SERP and all these things that are changing with AI overviews and different AI search formats, how do you feel about your ability to drive CTR going forward? And then the second question is, it looks like you're now working with OpenAI for some aspect of cloud infrastructure. Just curious how that relationship might expand in the future. Thank you.
I can take the first one. Look, specifically referring to the AI overviews, if I understood your question correctly, Sundar mentioned it. They continue to derive higher satisfaction. They continue to derive higher search usage. They're scaling up very nicely, and they're actually working for our entire user base now, scaled to over 2 billion users in over 200 countries. So very happy with this development. And when it comes specifically to the monetization of it, we talked about it before. We see monetization at approximately the same rate, which gives us actually a really strong base on which we can then innovate and drive actually a more innovative and new and next generation ad formats. That's how we look at it at this moment in time.
On the second part, with respect to OpenAI, look, we are very excited to be partnering with them on Google Cloud. Google Cloud, is an open platform, and we have a strong history of supporting great companies, startups, AI labs, etc. So super excited about our partnership there on the cloud side, and we look forward to investing more in that relationship and growing it there.
Our next question comes from Mark Mahaney with Evercore. Your line is now open.
Okay, 2 questions, please. First, could you just describe, maybe, Philip, what you see in terms of the ad environment, maybe for the back half of the year, maybe versus last year? Does it seem as certain or as uncertain as it was last year? The results seem pretty strong. Are there any unusual concerns you would have for the back half of the year? And then, Sundar, I want to ask you again about the 2 surfaces approach to search. And you obviously you must have some internal metrics that tell you that's the optimal way for you to approach the market. But I'm sure there's a counter argument that just having that unified search and being able to discern the intent of the search, whether it's pure information or commercial, just from the query, that could give you a material advantage over other offerings in the market. Just talk a little bit about what metrics you've seen that make the 2 surface solutions seem to be optimal. Thank you.
So let me start. Look, we said our ads business performed strongly in Q2. Give you maybe some vertical color of it. In Q2, search and other performance was led by growth across all verticals. We mentioned the largest contributions from retail and financial services, which was primarily due actually to strength in insurance. We saw healthcare as a sizable contributor to growth as well. Look, we're only a few weeks into Q3, so I think it's really too early to comment on anything happened in the second half of the year.
Look, and Mark, on the second part of the question, look, I think between these 2 surfaces, you pretty much you're covering the entire breadth and depth of what humanity can possibly do. So I think there's plenty for 2 surfaces to tackle at this moment. Obviously, you are right. Search is more information focused. And we think of the Gemini app as more your assistant, a more personal, proactive, and powerful assistant for every aspect of your daily life. And so you can imagine wanting to code deeply or create a long video, etc. Like, those things can be done by the Gemini app today better. Over time, like we've always done, we've gone through these evolutions before. Like, as you point out, we can understand user intent better and abstract some of the complexity for our users. At one point, people used to go to query separately for text, differently from images, differently from videos, etc. And we kind of made it all seamless with universal search. So we have the experience of being able to bring together experiences in a way that makes sense for users and do the heavy lifting for them. But I think when you're in this early stage of new emerging paradigms, I think we want to make sure we can meet them where they're what they are expecting today, and over time, I think it'll give us an opportunity to serve them better. So I think that's how we are thinking about it.
Okay, thank you.
Our next question comes from Ken Gawrelski with Wells Fargo. Your line is now open.
Thank you very much. Two, if I may, please. The first on cloud, I'm just hoping maybe you could clarify your back half outlook. Given last quarter, you talked about some supply constraints that would ease towards the end of 2025, but yet you put up a really nice acceleration in 2Q. Now you're talking about some supply constraints easing into 26. If you could just clarify a little bit on the back half outlook for cloud, given the strong results in 2Q. And then the second is a bigger picture question, which is an agentic experience. Does it democratize the web like search did 2 decades ago, enabling discovery in the long tail? Or does it lead to more concentration with a smaller group of vertical winners? Would love it if you could opine on that. Thank you.
Okay, on your first question on the cloud second half outlook and the comments I previously made on with regards to where we're going to see the capacity increase. So obviously we're working hard to bring more capacity online, which means data centers and servers are coming online. And we see more of an increase towards the back end of the year. But we're increasing capacity with every quarter that goes by, as you can see with the growth rates we've had both this quarter and in the previous quarter. As Sundar mentioned earlier, this is not the type of investment that's a light switch. It takes time to make this investment. So what you're seeing now is investment we made some time ago that's now translating to additional capacity coming online, but more of that towards the back end of the year. I will say it's important as you think about cloud growth, not to think about this in a linear fashion, because the quarter-on-quarter growth rates could depend on the timing of capacity delivery and when that comes online, so that could move a little bit from quarter to quarter.
Look, on agentic experience, look, I think there was an earlier question on the technology aspects of it and how we are making progress. Obviously, there's the value proposition for all the players involved, and I think that's going to be an equally important thing to create the unlock here. And I do think, over time, users will, it's clear to me as we make progress on the agentic experience, it's going to be a much better experience for users, right? And so you'll find savvier players leaning into these experiences, and that'll help them grow and meet this moment. And I think, I do think it's an opportunity for some of the players. And so you are right, just like the early days of the web, there are aspects about it which will expand access, grow the use cases, etc. And I think that elements are there. But I do think it's important. It's not just a technology play, but we have to solve the business models for the varying players involved. So, and I think that's going to be an important part of this evolution as well.
Thank you.
And our last question comes from Justin Post with BAML. Your line is now open.
Great, thank you. A couple for Sundar. First, looks like the subscription businesses are all tracking well, and certainly Gemini 2.5 has got some much good reviews. How are you doing with Gemini subscriptions? I know it's a focus area for the company, and anything you can kind of do to accelerate the consumer subscriptions of Gemini within Google One. And then secondly, just on the course change of CapEx, obviously a bigger increase, which appears to be because of cloud demand, but just your comments on cloud ROI and I'm sorry, CapEx ROI. What gives you confidence that you're going to get good returns on that spend? Thank you.
Great. Look, on the first thing on subscriptions, we've definitely, Google One has been an attractive value proposition powered by storage, but with now our AI plans, including both Pro and Ultra, and particularly with the 2.5 series of models, we've definitely seen accelerated traction. So it was a very healthy quarter. And so we are definitely excited about the opportunities ahead. And you will find, through this moment, I think we'll be able to drive growth in that area based on our AI offerings. And so it's definitely an area we are both excited by, and we are actually seeing traction, particularly in the last quarter, ever since we introduced 2.5 Pro. So we are excited about the trajectory there. On the CapEx on the cloud side, look, I think we are definitely investing because we are delivering a lot of value through our cloud offerings, and I think it's important to understand, as we build more and more of an install base with Google Cloud, we have very high customer satisfaction. Our churn rates are very low, and we are much more efficient in the investments needed to grow those lines of businesses. So you're seeing all that play out in our margin trajectory, particularly if you look at it annually, sequentially over the past few years. So all that gives us confidence as we are investing in this. We'll be able to have a healthy ROI on our investments, and particularly in this AI moment. There's definitely the value we are delivering to the customers is also growing pretty significantly on a forward-looking basis. And so I think all that, will help us, do well here.
Thank you. And that concludes our question and answer session for today. I'd like to turn the conference back over to Jim Friedland for any further remarks.
Thanks, everyone, for joining us today. We look forward to speaking with you again on our third quarter 2025 call. Thank you, and have a good evening.
Thank you, everyone. This concludes today's conference.
That was genuinely the worst closing remarks I've ever seen, but overall, an amazing quarter. And the free cash flow wasn't as great as what people were expecting, but search is definitely not dying. This is doing way better than people thought. There's so much momentum behind Google Cloud Platform and YouTube. Once you start adding on, Waymo and the other additions of the company, this is a business I have to own. We're going to be jumping into Tesla earnings here in the next few minutes. Listening into that, ladies and gentlemen, I am not an anti-Tesla individual. This used to be a company I've held for very many years, okay? I was actually, to go all the way back in my investing career, the first stock I ever purchased was in 2015. It was Tesla stock, okay? I've always been a fan of their products, loved the idea of electric cars. However, I just recently sold this company to pour more of my money into NVIDIA. So far, that call has been correct. It's not even, NVIDIA is not even the company reporting in after hours today, but they're up 0.9%. Tesla is down 0.3%. That's not the, what proves out the thesis or not, but I am here to listen to what Elon and, the rest of the team has to say about artificial intelligence, the state of Tesla right now. Let's have a listen in, not necessarily as hyper bulls or hyper bears, but as curious investors that want to learn more about markets and potentially where the world is headed. So I'm very, very happy about Google's quarter, just to highlight, but also excited to hear what's going to happen with Tesla as well. AMD has to be up because the amount of CapEx that they had saying that they're going to continue to grow in this arena, it's like, I think some people last quarter thought, okay, well, we're going to get into a phase of, 40% year-over-year growth rates. They just shown off 70% and said it's going to continue to grow. By Q3, Q4, it's probably going to be like 90% year-over-year if it continues at this rate. This is so unbelievably bullish for AMD, for NVIDIA, for Broadcom, the whole list of other companies in the supply chain for chip manufacturing. So I'm a happy camper there, but let's jump into Tesla earnings soon. Tesla report was horrific. Yeah, I actually think it's extremely okay. Earnings starting. I'll talk about my thoughts afterwards, but let's jump in.
in a week or so.
Not anything?
4 weeks?
Anything at all?
Yeah, a couple of weeks. A couple of weeks or so. And then we're getting the regulatory permission to launch in the Bay Area, Nevada, Arizona, and and Florida, and a number of other places. So as we get the approvals and we prove out safety, then we'll be launching autonomous ride-hailing in most of the country. And I think we'll probably have autonomous ride-hailing in probably half the population of the U.S. by the end of the year. That's at least our goal, subject to regulatory approvals. I think we'll technically be able to do it. So, assuming we get regulatory approvals, it's probably addressing half the population of the U.S. by the end of the year. But we are being very cautious. We don't want to take any chances, and so we're gonna go cautiously. But the service areas and the number of vehicles in operation will increase at a hyper exponential rate. Some other notable things. Model Y in June became the best-selling car in Turkey, Netherlands, Switzerland, and Austria. It is, I believe, the best-selling car of any kind in the world still. Autonomy is a big factor there. So even without supervised, even with just supervised self-driving, it's a huge selling point. And it's worth noting that we do not actually yet have approval for supervised FSD in Europe. So our sales in Europe, we think, will improve significantly once we are able to give customers the same experience that they have in the US. This is, I think, a very important point to convey. And we've been working with our main country regulator, which is the Netherlands. And I think we're close to getting approval with the Netherlands. Then it's going to go to the EU. It's quite a Kafkaesque. In fact, Kafka had no idea that something like the EU could exist. Beyond Kafkaesque challenges with bureaucracy, but we will get the approvals, and I think we'll get so people in Europe will have an experience similar to that of the US in most of Europe. This year, hopefully, at least partially in this quarter. And then we also have some regulatory challenges in China, which we're hoping to unblock shortly, because we also cannot provide supervised FSD in China currently, but we hope to unblock that soon. And that's another major. It really is the single biggest demand driver. And then within the U.S., as we get confident about safety in different geographic areas, we will loosen up on how much somebody has to be laser focused, to have their eyes laser focused on the road. Because that's been a common complaint. In fact, it does create an odd safety issue where people will sometimes disengage autopilot, then do something, change the radio, or maybe look at the phone, drive with their knee, and then re-engage autopilot, which obviously is less safe than simply keeping autopilot on. So anyway, we're get that experience will improve in the next several weeks. Because of our focus on Austin with no one in the driver's seat, the production release of autopilot is actually several months behind what people experience on a robotaxi in Austin. So now we have the robotaxi in Austin launched. We'll be adding back those elements so that there will be a step change improvement in the autopilot experience for people outside of Austin. So this is really, as you can tell, this is very much sort of autonomy is the story. Like we need the physical product, without which you cannot have autonomy. But once you have the physical product, you need the autonomy is what amplifies the value to stratospheric levels. We also launched the Tesla Dyna, which has been a huge hit. It actually got worldwide attention, which is unusual for a Dyna. Dynas don't typically get headline news around Earth. But this is a pretty special Dyna, and if you're in the LA area, it's worth visiting. It's sort of a shiny beacon of hope in an otherwise sort of bleak urban landscape, frankly. So it's really quite a lovely experience. Great job by the Tesla team there. On the full self-driving front, continue talking about that. We have we're continuing to make significant improvements just with the software. So we're expecting to increase the parameter count. Actually, at this point, I think we can probably 10x almost 10x the parameter. Yeah, roughly 10x the parameter count. So this is actually a very tricky thing to do, because as you increase the parameter count, you get choked on memory bandwidth. But we currently think we can 10x the parameter count from what people are currently experiencing. So not just a 4x, actually 10x increase in parameter count. Yeah, so there's still a lot of improvement on the existing hardware to happen. Energy is growing really well, despite headwinds from tariffs and various supply chain challenges. The Megapack is expanding capacity quickly, and we have upgrades to the Megapack that will make it even better. And we had record Powerwall deployments again in Q2. So I think batteries are just going to be a massive thing. The scale of battery demand is, I think, not that many people appreciate just how gigantic the scale of battery demand is. The way to think about it is that the U.S. sustained power output for the U.S. grid is around 1 terawatt, but average usage is less than half a terawatt. If you add batteries to the mix, you can run the power plants 24/7 at full capacity, thus more than doubling the energy output per year of the United States, just with batteries. But that's again, big deal. It's a really big deal. Optimus. So we're evolving the Optimus design and really getting Optimus to the point where it is a phenomenal design. So we're on Optimus version 2 right now, sort of 2.5. Optimus 3 is an exquisite design, in my opinion, and will be an incredible. As I've said many times before, predicted it will be the biggest product ever. It's a very hard problem to solve. You have to design every part of it from physics first principles. There's nothing that's off the shelf that actually works. So you're going to design every motor, gearbox, power electronics, control electronics, sensors, the mechanical elements. We've also got to train Optimus to use its lens and its sensors with a neural net. But we'll be applying the same techniques that we've applied for a car, which is essentially a four-wheeled robot, and Optimus is a robot with arms and legs. So the same principles that apply to optimizing AI inference on the car apply to Optimus, because they're both really robots in different forms. And Tesla, it is important to note that Tesla is by far the best in the world at real world AI. Like a clear proof point for that would be if you compare, say, Tesla to Waymo. Waymo's got, the car is festooned with God knows how many sensors. And yet, isn't Google good at AI? Yes, but they're not good at real world AI. Thus far, Tesla is actually much better than Google by far, and much better than anyone at real world AI. And by far, Tesla has the best inference efficiency. Like, I think a key figure of merit for AI is what is the intelligence per gigabyte? And people talk about parameters, blah blah blah. But I think we'll stop talking about parameters and talk about gigabytes, because with the parameters you can have 4-bit parameters, 8-bit parameters, 16-bit parameters, but the actual constraints in the hardware are how many gigabytes of RAM and how many gigabytes per second can you transfer from RAM. Therefore, it is not a parameter constraint. It is a byte constraint. And Tesla has the highest intelligence density of any AI by far. And I have a lot of insight into this with XAI. XAI is, Grok is the smartest AI overall, but it's Grok 4 is a giant beast. Sort of at the terabyte level. So it's kind of important to note Tesla has the best intelligence density. Intelligence density will be a very big deal in the future. It is now. So with Optimus 3, which is really the right design, it's like it doesn't have, at this point, there's no significant flaws with the Optimus 3 design. But we are going to retool a bunch of things, so it'll probably be prototypes of Optimus 3 end of this year, and then scale production next year. I'm going to try to scale Optimus production as fast as it's humanly possible to do so, and try to get to 1 million units a year as quickly as possible. We think we can get there in less than 5 years. That's my sort of, I guess. That's a reasonable aspiration, is 1 million units a year. 5 years. It seems like an achievable target. But in conclusion, so far 2025 has been a very exciting year. A lot of major milestones. We've made clear, demonstrable progress in autonomy that a lot of naysayers said we would not achieve. But it's worth noting that we have done what we said we were going to do. Doesn't mean we're always on time, but we get it done. And our naysayers are sitting there with egg on their face. So great progress by the Tesla team. I do think if Tesla continues to execute well with vehicle autonomy and humanoid robot autonomy, it will be the most valuable company in the world. It's a lot of execution between here and there. It doesn't just happen. But provided we execute very well, I think Tesla has a shot at being the most valuable company in the world. Anyway,
sounds confident.
I'm extremely optimistic about the future of the company. Best way to predict the future is to make it happen, and we're making it happen here with the Tesla team. So I'd just like to say thanks to all of our supporters, and I think we've got an incredibly exciting future.
Great. Thank you very much, Elon. And Bedlock has her remarks as well.
Travis, as Elon mentioned, Q2 was an interesting quarter in a few respects. We started ramping up the production of the new Model Y at all our factories. We rolled out our robotaxi service in Austin and delivered a car completely autonomously directly from the factory to the customer's home. It is a seminal point to get to this thing. I mean, it took a lot of effort, and I really want to thank everybody at Tesla to make this happen. It wasn't an easy thing to do, but we did it. It took time, but we've just begun the next phase for the company. The one big bill has a lot of changes that would affect our business in the near term. The first among those changes is the repeal of the IRA EV credit of $7,500 by the end of this quarter. Given the abrupt change, we have limited supply of vehicles in the US this quarter, as we are already within lead times to order parts to build cars. We've rolled out all our planned incentives already and will start paring them back as we start to sell them. If you're in the US and looking to buy a car, place your order now, as we may not be able to guarantee delivery for orders placed in the later part of August and beyond. The bill also made changes to certain emission standards by reducing the amount of penalty to zero. This in turn will have an impact on the new sales of regulatory credits to other OEMs, and in turn will lead to lower revenues. While we've never planned our business around such sales, it will nonetheless impact our total revenues going forward. On the automotive product portfolio, the entire lineup is updated. Globally, we're seeing an increase in the number of test drives. We started the production of the lower cost model as planned in the first half of 25. However, given our focus on building and delivering as many vehicles as possible in the US before the EV credit expires, and the additional complexity of ramping a new product, the ramp will happen next quarter, slower than initially expected. One thing which is grossly underappreciated, and Elon talked about it, is that all our vehicles in the lineup are capable of autonomy. This is by far the biggest differentiator between us and the competition. Our vehicles top safety standard as is, but with FSD, they are and will continue to set a new standard for safety within vehicular transportation. We published our vehicle safety report earlier today, and you can see a car on FSD is 10x safer than a car not on FSD. We've started seeing an uptick in FSD adoption in North America in recent months, which is a very promising trend. And just to give you perspective, since the launch of, since we moved to version 12 of FSD, we've seen the adoption rates really increase. We've started seeing on the automotive revenue front, despite reduction in regulatory credit revenue, and the total automotive revenue increased by 19% sequentially, even though total deliveries only improved 14%. This was primarily due to an improved ASPs because of the new Model Y. This helped in improving margins sequentially as well, along with improved mix and higher fixed cost absorption, despite an increase in costs from tariffs. We've started seeing the impact of tariffs in our P&L. Sequentially, the cost of tariffs increased around $300 million, with approximately 2/3 of that impact in automotive and rest in energy. However, given the latency in manufacturing and sales, the full impacts will come through in the following quarters, and so costs will increase in the near term. While we're doing our best to manage these impacts, we are in an unpredictable environment on the tariff front. The margins for the energy generation and storage businesses improved sequentially, while deployment reduced, primarily due to the ramp of power deployments at higher margins. We were able to achieve our highest gross profit for the business yet. Note that the overall deployments will continue to vary quarter to quarter. I think Elon covered this, that industrial storage will make a difference in this drive towards AI and data center growth. The energy requirements are increasing at a rapid scale as AI applications are very energy hungry. The quickest path to scale up energy is deploying storage. This is something that our customers have started realizing, and despite this business having the largest impacts from tariffs, we're seeing customers willing to accept some of the tariff impacts. The big bill has certain adverse impacts even for the energy business, most notably on the residential storage business due to the early expiration of consumer credits by the end of this year. The challenges of the storage business therefore remain both from the bill and from the tariffs, and we're doing our best to try and manage through this, but we will see shifts in demand and profitability. The margins for our service and other businesses improves sequentially, primarily due to higher profits from supercharging and improvement in insurance and service center profitability. Operating expenses also grew sequentially as we continued our investment in AI projects, including additional expenses related to employee-related costs, including higher stock-based compensation and depreciation for AI compute. Our operating expenses, especially R&D related spend, will continue to grow. We believe even in the current environment, it is the right strategy to keep making investments in these areas to position us for the long term. Other income grew sequentially, primarily from the mark-to-market adjustment on Bitcoin holdings, which was $284 million gain in Q2, while being $125 million loss in Q1. Just want to remind people that this would keep creating volatility based on the Bitcoin pricing. While operating cash flows increased sequentially, so did our CapEx, resulting in $146 million of free cash flow. We continue to make investments in various aspects of manufacturing, like the Cybercab, semi-lines, and other manufacturing spend, and the expansion of our AI initiatives. Our latest expectation for the year in terms of CapEx is in excess of $9 billion. To summarize, we have near-term challenges in our business due to the negative impacts of the bill and tariffs. However, the investments that we have made for AI, robotics, and our lead in energy sets us up for a bright future. I would like to thank the whole Tesla team, our customers, our investors, and supporters for their continued belief in us.
Great. Thank you very much, Vaibhav. So now we're going to move on to say.com questions. The first question is, can you give us some insight how robotaxis have been performing so far, and what rate you expect to expand in terms of vehicles, geofence, cities, and supervisors?
Yeah, robotaxi has been doing great so far in Austin. Customers really love the experience. It's like super smooth, very safe, and like just a great experience overall. And we already did the first wave of expansion in Austin, and we'll continue to expand in Austin to probably more than 10x our current operating region. We're also testing in a lot of other cities, as Elon mentioned. The next thing to expand would be in the San Francisco Bay Area. We are working with the government to get approval here, and in the meanwhile, launch the service with the person in the driver's seat just to expedite, and while we wait for regulatory approval. We're also testing a lot of other cities in the US, including Florida, Nevada, etc.
Great. Thank you very much, Ashok. The next question is, what are the key technical and regulatory hurdles still remaining for unsupervised FSD to be available for personal use? Can you provide a timeline?
We're certainly getting there. I think it'll be available for unsupervised personal use by the end of this year in certain geographies. We're just being very careful about it. So.
This is not something which we want to rush.
No.
We want to make sure that everything is safe before we make it available broadly.
Yeah, we're just being extremely paranoid.
Yes.
But I'm confident that by the end of this year, within a number of cities in the U.S., it'll be available to end users.
Yeah, and for what it's worth, the same AI hardware in the Austin robotaxi vehicles has some customer vehicles, and we did deliver a car autonomously from the factory to a customer this quarter.
Yes.
And every Tesla manufacturer in the US and in Europe autonomously drives itself from the end of line to the loading docks. And so it's just a software upgrade away.
Yeah. I think we'll end up delivering cars in the greater Austin area and the Bay Area by default from the factory by the end of this year. Like a car will deliver itself to where you are, unless you say you don't want that.
It'll be super cool.
Yeah.
Great. Thank you, guys. The next question is, what specific factory tasks is Optimus currently performing, and what is the expected timeline for scaling production to enable external sales? How does Tesla envision Optimus contributing to revenue the next 2 to 3 years?
Yeah. So the Optimus 3 design, as I mentioned earlier, is, I think, finally the right design. There'll be further optimizations, but there are no fundamental changes that are needed for the Optimus 3 design. It has all the degrees of freedom that you really want or need. So it's, we'll have prototypes of that in, I don't know, 3 months, and then start tooling up production. We'll certainly start production on that in the beginning of next year. The production ramp is difficult. It's always difficult to predict the S curve of a production ramp when something has got when everything is new, because the rate of production will move as fast as the least lucky and least competent element of the entire supply chain, as well as in internal processes. So the more new stuff that is in a product, the slower the ramp could be because of unexpected supply chain interruptions or mistakes made internally. It's much easier to predict sort of the end of the S curve or late in the S curve than the beginning of the S curve. And the beginning of the S curve of the production ramp is, in any case, not really material for revenue purposes. The beginning of the S curve, you're always negative gross margin, and you're debugging a lot of issues. So that's why, like, I feel like fairly confident in predicting things, or at least medium confident in predicting where we are in 5 years, but it's hard to predict where we are in a year or 2 years. So that's why I think 5 years, I think we could be at the, let me put this way, I'd be surprised if at the end of 5 years, 60 months from now, if we are not roughly making 100,000 Optimus robots a month in 60 months, I would be shocked.
All right. Thank you very much. Next question is, can you provide an update on the development and production timeline for Tesla's more affordable models? How will these models balance cost reduction and profitability, and what impact do you expect on demand in the current economic climate?
Well, I think Vaibhav did a good job of answering this question in his opening remarks. As we said, we started production in June, and we're ramping quality builds and things throughout the quarter. And given that we started in North America, and that our goal is to maximize production with a higher rate cliff ending in Q3, we're going to keep pushing hard on our current models to avoid complexity. And fortunately, when that rolls away, we'll be ready with the new, more affordable models available for everyone in Q4. And the goal of those products was not to negatively impact revenue or gross margin, but just to make a car that everyone loves and wants at a more affordable price.
Great. Thank you, Lars. The next question is, can you talk about the benefits of Tesla investing in XAI?
This is not the forum to discuss this topic. I mean, if there is something which we need to discuss, we'll discuss it separately.
I think obviously, we're a publicly traded company. Shareholders are welcome to put forward any shareholder proposals that they'd like. I've recently encouraged that, and then have shareholders vote, and we'll act in accordance with the shareholder wishes.
Great. Thank you very much. The next question is, can you tell us a little bit more about what goes on in the Tesla design studio?
Do you want me to take that one? We kind of generally say that what happens in the studio stays in the studio, and that earnings calls are not the place to disclose new product stuff. But we're working to make sure that we have an exciting future for our Tesla and in the product lineup.
Yeah, there's a lot of exciting things happening in the design studio. It's not like static. And really what's going to happen over the next several years is a fundamental transformation of the company from a pre-autonomy world to a post-autonomy. And I'm working on a new master plan to articulate that as a team. And there will be some teething pains as you transition from pre-autonomy to a post-autonomy world. But I think the future vision for Tesla is incredibly exciting and will profoundly change the world in a good way. And, this may sound like sort of hype or whatever, but I think let's just say if we execute on that plan effectively, which is you have to actually do that, Tesla will be the most valuable company in the world by far.
Great, thank you. The next question is actually a duplicate on unsupervised FSD for customer vehicles, so we'll skip that. After that is, are there any news for hardware 3 users getting retrofits or upgrades? Will they get hardware 4 or some future version of hardware 5?
I mean, what we want to do is we want to get unsupervised done on hardware 4 first. Once it's done, then we will go back and look at what we need to do with the hardware 3 cars. I mean, like I said, the focus is first to get unsupervised out, and then we'll go back and see what more work we need to do.
Great. The next question is, can you give an update on Dojo, and could XAI be a customer for Dojo?
Dojo 2, we expect to have Dojo 2 operating at scale sometime next year, with scale being somewhere around 100K H100 equivalents. And then AI5, which is really a spectacular chip. I don't use those words lightly. It's spectacular chip. The AI5 chip will be hopefully be in volume production around the end of next year. But that has a lot of potential. I think thinking about Dojo 3 and the AI6 inference chip, it seems like intuitively we want to try to find convergence there, where it's basically the same chip that is used, where we use, say, 2 of them in a car or an Optimus, and maybe a larger number on a board, like kind of 512 on a board or something like that, if you want high bandwidth communication between the chips at a force surveying, doing inference surveying. That sort of seems like intuitively the sensible way to go.
Great. The next set of questions have all actually been covered. So we'll end with how will the BBB elimination of tax credits for solar projects affect your sales pipeline for Megapack?
Yeah, our sales pipeline is quite diversified across customers and market segments. So we aren't heavily weighted in Megapack projects that are paired with solar. And as we talked about in the opening remarks, we're seeing storage quickly being recognized for its ability to unlock grid efficiency and how quickly it can be deployed to help the grid. Additionally, although the recent bill was not favorable towards solar, we believe solar projects will still get built because the energy is necessary, the projects are well developed, and they're ready for execution, and there's really no alternatives in the near term given gas turbine lead time and pricing. We also continue to see growth in the data center segment and in standalone storage projects providing capacity to the grid in several markets across the US. Overall, we're forecasting a very strong second half of the year as we increase deployments. And lastly, we continue to invest heavily in US manufacturing to mitigate policy and tariff impacts, expecting our first LFP cell manufacturing facility to be online by the end of the year and launching our third Megafactory near Houston in 2026.
Great. Thank you, Mike. We will now be moving to analyst questions. The first question comes from Emmanuel Rosner at Wolfe Research. Emmanuel, please feel free to unmute yourself whenever you're ready.
Great, thank you so much. Can you hear me?
Yep.
Thanks. So Ilan, are you able to share any KPIs with us in terms of the robotaxi business? How many vehicles are you operating, miles driven autonomously, or the number of safety critical intervention? Just curious, how the rollout it generally is going, and any sort of like targets that you could share more broadly.
Sure.
Yeah, we have more than 7,000 miles operating in Austin area. It's just because service is new, we have a handful of vehicles right now, but then we are trying to expand the service in terms of both the area and also the number of vehicles both in Austin and other locations. So far, there's like no notable safety critical incidents. There, sometimes we have our own restrictions as to, for example, we restrict our speed limit to 40 miles per hour roads. And if the vehicle wants to go on like higher speed roads, we can stop the vehicle, but those are out of convenience as opposed to safety critical nature. So far, the service has been really well received, and we continue to expand on it.
Great. And then, longer term, from an economics point of view, longer term, you've previously talked about working to drive down the cost per mile on robotaxis, maybe towards 30 or 40 cents per mile over time. Now that your service is live, how should we think about the main milestones to getting there?
Yeah, well, the Cybercab which is really optimized for autonomy. That I think has got probably sub 30 cent per mile potential over time, maybe 25. It's really like if you design a car from scratch to be a cost optimized robotic taxi like Cybercab. Like for example, we're not trying to make it corner like incredibly well like a Model 3 would, or Model S or even Model Y. Like it's got all of our cars that are driven by people are super fun to drive. They've got incredible acceleration, the incredible cornering capability. But we're confident that very few people in a Cybercab want to be hurtling around. So we reduced the top end speed, which means we can use more efficient tires. We don't need as much acceleration. We don't need as much, big brakes to sort of. We want stopping distance, but we're not expecting it to be heavily used. It's a gentle ride. Essentially, if you design it for a gentle ride, and then you have a much more optimized design point. So that's why it seems probable we could achieve that. Especially if Optimus is, serving, cleaning up the car and doing maintenance and stuff. Doing automatic charging. So I think it's going to, the actual cost per mile of Cybercab will be very low. The cost per mile of our existing fleet will be higher, but still very competitive. So, maybe some number of 50 cents, I'm just guessing. So this really, Tesla's road taxi fleet will go from tiny to gigantic in terms of operations in a pretty short period of time. Like my guess is it has a material impact on our financials around the end of next year.
Great. Thank you very much. The next question comes from Adam at Morgan Stanley. Adam, please unmute yourself.
Great. Hello, everybody. So Elon, as Tesla moves into this next phase of physical AI, autonomous humanoids, robotaxis, etc., world-changing, civilizational species-changing technology with dual purpose, Are you comfortable moving Tesla in this direction while only having a 13% stake in the economy? In the company? Is that sustainable, or do you still insist that something needs to happen, given your current lack of control and the types of technologies you're getting into?
Yeah, that is a major concern for me, as I've mentioned in the past, and I hope that is addressed at the upcoming shareholders meeting. Yeah, it is a big deal. Like, I want to find that I've got like so little control that I can easily be ousted by activist shareholders after having built, this army of humanoid robots. I think that, as I mentioned before, I think my control of a Tesla should be enough to ensure that it goes in a good direction, but not so much control that I can't be thrown out if I go crazy.
Okay, Elon, you're not going to go crazy. We trust you.
Well,
you can stay a little crazy. A little crazy is okay. Elon, though, we understand the board of directors of a major U.S. investment bank recently toured Optimus production. I don't know if you want to confirm that or not. It's just what we've heard. That's cool. But when do you think others will be able to get a firsthand view of Optimus like that? And is the second half of this year too soon to have an AI day? Because it seems like everybody else in the world's doing it, and this talent war is getting freaking crazy. And I know you mentioned for recruiting purposes, this is a very important thing that you've done. I think people have copied you on this, and I'm wondering if this year's too early for that. Thanks, Elon.
Yeah, it's a bit of a tough thing, because like when we're doing AI day, we find that some of our competitors have literally done a frame-by-frame examination of our slides and everything we say, and then copy us. So, I'm saying, like, what's the trade-off? It does help with recruiting, but then competitors look very closely and copy us. I mean, that said, we should probably, I guess we could consider the shareholder meeting to be sort of we can maybe go into depth, some amount of depth at the annual shareholder meeting, with respect to Optimus and AI and sort of our chip stuff, perhaps. Yeah. Tesla's also really underrated in terms of AI chip design, as well as AI software. So, like, there's still not a chip that exists that we would prefer to put in our car. That is an AI chip that we would prefer to put in the car over our own. And even though it's been now out for several years, and we're confident that the AI5 chip will be a profound game changer. In fact, it's so powerful that we'll have to nerf it to some degree for markets outside of the US, because it flows way past the export restrictions. So unless the export restrictions change, we actually will have to nerf our AI5 chip, which is kind of weird. Hopefully we keep raising the bar on export restrictions. Otherwise, it gets a bit silly. We'll have a bunch of Optimus robots on stage at the shareholder meeting. The Optimus Lab is cool to see. It basically looks like the set of Westworld. You could robots in various stages. Some of them are, in various stages of repair. Like, I don't know, some combination of like the Tatooine junkyard and Westworld. That's what it looks like. It's very cool. And Optimus is walking around the office here in Palo Alto. So just 24/7, it's just walking around like it's normal. And we saw Optimus, like, the Tesla diner serving popcorn. Yeah, so we'll go from a world where robots are rare to where they're so common that you don't even look up.
Great. Thank you so much. The next question comes from Edison at Deutsche Bank. Edison, please unmute yourself. Edison, please go ahead and unmute yourself. All right, while Edison figures that out, we will go to the next question, which is going to come from Dan Levi at Barclays. Dan, please go ahead and unmute yourself.
Great, thank you. Elon, you've talked about the opportunity to put non-Tesla owned vehicles into the robotaxi network. Just talk about the gating factors to enabling that and what timeline we should expect on personally owned vehicles in the robotaxi network.
We haven't really thought hard about that. Like we need to make sure it works when the vehicles are fully under our control. Yeah, it's kind of one step at a time here. We don't want to jump the gun. As I said, we're being paranoid about safety. So it's like, but I guess it would, like next year is, I'd say confidently next year. I'm not sure when next year, but confidently next year, people would be able to add or subtract their car to the Tesla fleet.
I mean, one thing to keep in mind is that we will have some criteria, because like even when you put your car in an Uber or Lyft fleet, they go through a whole checklist process of making sure things are working.
It's like an Airbnb or
yes.
Bad, yeah.
Yeah, so we will do something like that.
Kind of vetting process.
Yes. Because we want, like Elon said, we want to be paranoid about security. I mean, small things like tread on the tire can have an impact on safety. So that's why we would want to do some proper validation before we let other cars come in.
Dan, you have a follow-up?
Yes, thank you. Could you just unpack the different costs associated with scaling the robotaxi business and how you think about funding those costs? Are the cash flows in the auto business sufficient to fund it? And if not, what other funding sources do you think you'd use? You know, would you just fund it off the balance sheet?
Well, as soon as there is a clear cash flow stream associated with any product, you can debt finance it.
And in the interim?
I mean, in the interim, we will use our balance sheet, but like once we get to a certain scale in terms of recurring revenues, like Elon said, we could get into an easily this kind of transaction to try and get funding.
Great. Thanks so much. We will now move on to Mark from Goldman Sachs. Mark, please feel free to unmute yourself.
Yes, good afternoon. Thank you very much for taking the questions. With the FSD trials that Tesla has been offering to consumers and the attention on self-driving more generally, are you able to comment more specifically on what you're seeing with FSD subscription trends and take rates and help us better understand how large FSD revenue may be currently?
So we've definitely, like I mentioned it in my opening remarks, since we've launched version 12 of FSD in North America, we've definitely seen a marked improvement in the FSD adoption. And the other thing which we had also done last year is we did bring down the pricing and we made subscription much more affordable. So we have seen, 25% increase since that time. So, which is an encouraging trend, but honestly, we've just started the story around explaining the benefits of FSD. Like I said before, we released our vehicle safety report. Even if you don't believe in this, anything else, a car on FSD being 10x safer should be a motivator. Plus, the other thing is, people don't realize even at $99 a month, it's like you're getting a personal chauffeur for almost $3.33 a day. And this is by far the biggest game changer, which I know we've been talking about it because part of it is we live and breathe it, but
yeah,
I feel
most people still don't know.
Yeah.
The vast majority of people don't know it exists. And it's still like half of Tesla owners who could use it haven't tried it even once. They don't actually realize that. Obviously, this is something we want to educate them on. So we've got to, when they come in for service, we'll reach out to them, send them like videos of how to make it work. It's such a shocking thing. They don't think a car is capable of this. So you have to show them and get them comfortable with turning it on and off. It's so trivial, but it's it's like saying you've got a cat that can sing and dance, but it just looks like a normal cat. And you're like, until you see the cat sing and dance and talk, you assume it's just a cat. That's Tesla FSD.
Yes.
Our car is intelligent.
And so what we're going to do, to Elon's point, we've been giving people free time to try the FSD, but we'll start giving more prompts to say, okay, this particular drive, try FSD. So that, because it's literally seeing is believing. Like Elon said, think of it like a cat. It looks like a normal cat, but this cat can sing and dance.
Yeah.
Same thing on
It's
FSD.
intelligent.
Great. Yeah. And the 25% comment was 25% increase in the penetration rate since we've seen the release of V12 and V13 in North America. Great. Thank you. Mark, did you have a follow-up question?
Thanks, Travis. Tesla has historically said it would use pricing as one tool to help drive auto vehicle growth as long as free cash flow stayed positive, given the ability to monetize products like FSD. I'm curious how you're thinking about pricing from here as a potential tool to drive increased volumes, given where you stand with FSD, as well as the fact that the IRA purchase tax credits are poised to go away in the US starting in the fourth quarter. So should we expect more meaningful price reductions given that monetization potential, or do you envision price reductions being more limited compared to cost downs given where free cash flow now stands? Thanks.
Well, we're in this weird transition period where we'll lose a lot of incentives in the US. There's a lot of incentives actually in many other parts of the world, but we'll lose them in the US. But we'll still be at the relatively early stages of autonomy. On the other hand, autonomy is most advanced and most available from a regulatory standpoint in the US. So, does that mean we could have a few rough quarters? Yeah, we probably could have a few rough quarters. I'm not saying we will, but we could. Q4, Q1, maybe Q2. But once you get to autonomy at scale in the second half of next year, certainly by the end of next year, I think I'd be surprised if Tesla's economics are not very compelling.
Great. The next question is going to come from Will from Truist. Will, please feel free to unmute yourself when you're ready.
Great. Thanks so much for taking my questions. First, I'd like to ask for a little bit more detail about the lower cost model that you talked about having, I think, started production in the first half, but you said will ramp later. At the last Analyst Day, as I recall, you talked about some aspects of this, like two-thirds or three-quarters reduction in silicon carbide and not using rare earths in the motor and perhaps other cost downs. You also had this unboxed architecture that I think you said would not be part of this sort of interim approach. Can you update us on what we should expect this thing to actually look like?
Well, we won't get into the looks because
let's just come on the whack. Just lift the cat out of the bag there. Dancing cat that can sing and dance, but it can talk and sing and dance though. That's the cool part. Fundamentally, the biggest obstacle remains that people just don't have enough. Some people don't. The desire to buy the car is very high. Just people don't have enough money in their bank account to buy it. Literally, that is the issue. Not a lack of desire, but a lack of ability. So the more affordable we can make the car, the better. I think it will be a very big deal when people can release their car to the fleet and have it earn money for them. Which, like I said, I feel confident in saying that'll happen next year in the US at least. And in the US, we're legally allowed, appropriate disclaimers, and that'll make the affordability dramatically greater. Just like, if you have an Airbnb and you can rent out your home when you're not there, or rent out a guest room or guest house or something like that, the affordability of your home is much greater.
Okay. Trying another topic then. We see all these wonderful developments at XAI like Grok, and obviously Tesla's trying to do quite a bit in AI. Elon, how do you manage the division of efforts and recruiting and talent and capital between these two that seem like there's a very high potential that they could in fact compete?
Well, they are doing different things here. The XAI is doing terabyte scale models and multi-terabyte scale models. Tesla's 100 times smaller models. So one's real world AI and one's kind of, artificial superintelligence type of thing. Really kind of the genesis for XAI was that there were certain people who simply would not join Tesla, AI engineers, because they wanted to work on ASI. They would join Tesla. And I was like, well, maybe they'll join a new company. No, I think the Tesla problem is extremely important, but not everyone agrees with me on that. And so rather than have them join, OpenAI or Google or whatever, some other company, it's like, may as well have them create a company in that regard, which is XAI. So that's people can make a decision. Do they want to work on like super intelligence at data center or real world AI? They're both compelling problems, but some people want to work on one, and some want to work on the other.
Great. And unfortunately, that is all the time we have today. Thank you everyone so much for your questions, and we will see you next quarter.
Come on. Come on, guys. Okay, so probably the clearest thing, and I'm just going to say it again, like the fact that we have been able to spot this out, see what happened in Q1. Obviously, the market held it a little bit higher. By the way, it's down 4.8% now. Okay. Rotate into names that had less conviction, like Google, which actually did go up 1.7%. In fact, Amit was just in chat here, and I think he's going to give me a call here in a minute. But Amit donated yesterday to the community fund, which is just a fund that's designed by you guys. And he said, hey, you can pick Tesla or Google. And I am so happy that we picked Google, ladies and gentlemen, not just for, this quarter, this day, but over the next year. I mean, it's constantly the case that Tesla is in a transition period, and that's fine for a bit here Amit's calling. Bro.
Tanner, how are you?
What did we just listen to?
Listen to the Tesla Q2 2025 earnings, bro. That's what we just,
I don't know. I think I needed some sleeping pills or whatever the heck Elon was on, because that was brutal, dude.
Okay, so Tanner's streaming live, so hello to Tanner's audience. Tanner's live with me now on my channel. I want to ask you some questions. You can ask me some questions, but in general, forget the numbers, the energy in the call. What was your take from the beginning to the end on how you thought Elon was energetically?
They were talking about the Tesla diner before they were talking about Optimus, or like it was all scrambled. They were talking about Grok at one point. He was going off about Grok. It's not even the right company. That's not owned by Tesla. So it was a very scrambled call. But the worst part, I thought the absolute worst part, I've been listening to a lot of earnings calls. I don't know how many. It's in the hundreds. Okay. The fact that we're listening to a call where they're saying to the shareholder base, this is not a customer base, this is a shareholder base, and they're saying, hey, make sure you get your car orders in because, you know, the prices are about to go up and we can't offer you the 7,500 anymore. Unbelievable. This is not a car commercial. Okay, this is an earnings call. Talk about your earnings. It was a bad look. But I'm curious your thoughts. I'm in a very biased moment right now.
And it wasn't just me, right? I think you tweeted that you could barely hear Elon. It's like the mic wasn't near him or something.
Yeah, it was a quiet call. It was a quiet call. At some points, he was jumbled all over the place, and then you hear sometimes like analysts would jump on, and it would be super loud. So it like wasn't I don't know. Elon was loud for in certain moments, but I don't know if they were just positioned far away. But it made for a very hard listen. It'll have to be one that I read back for sure.
I will say this. The numbers were, we all knew the numbers were going to be so there wasn't any crazy surprise. Free cash flow was down a decent chunk, 89% year over year. So there's some nuances to that. But I think I've said this before, and I think you would concur, the only reason this stock is trading at $1 trillion valuation is because of Elon Musk.
Yeah.
And so for anyone saying Elon needs to leave or get out, I mean, go ahead, because maybe this thing is not worth more than $50 if he's not there. And I bring that up to say, if he's the reason it's at $1 trillion because of pure grit and sentiment and just how he makes people feel, this was not one of those calls where he made people feel, at least he didn't make me feel excited about Tesla. Now, granted, I'm bullish long term. So quite frankly, if this thing drops to 280, I would not bat an eye. I'd be very happy to buy more shares under 300. However, for the people that have been heavily allocated to this for the past 5 years, for the people that have the majority of their portfolio in Tesla, I don't think this was the most exciting call for what Elon could have said for the future. I think the major questions about autonomy, unfortunately, were just not answered in a way that got people excited. I mean, and every time they brought up a specific about autonomy, they kind of just didn't give an answer, right? Or they said it's up to regulations. We don't really know. It's about the future. Elon kept touting that if we solve autonomy, we will be the world's most valuable company, which I think all of us already know, right? Or at least we all, there's some level of belief that they could become a very valuable company. I don't know if the world's largest, but they could be if they solve it. So I think it was a lot of hopium that wasn't even backed by energy. Like, if you're going to give hopium, sure, but there was no energy across the CFO or the CEO. And I think that was my biggest critique of this call.
Yeah. Yeah. No, there is a price to buy Tesla. I'm not anti-Tesla to a point where I don't think that this is a company not worth owning. But if you're going to pay an extreme valuation, I want to see some great numbers, some great enthusiasm, and statistics that I'm going to believe. I mean, this idea that you're going to, bring autonomy to half the U.S. population by the end of the year. How, bro?
Okay, yeah, okay. Can we talk about that? What the hell? What is he talking about when he says that?
Yeah, you're putting LiDAR systems to reach out further in Austin with safety drivers and videos that are coming out where it's acting in extremely strange ways. You're not going to be putting this in personal cars with no safety drivers throughout half of the major cities in America in less than 5 months. I don't know.
Yeah, I thought that was a bit confusing. I mean, when I heard that, I was just like, by the end of the year? And it's like, it just feels unlikely that's going to happen. He also said, if we're not making 100,000 Optimus humanoid robots a month in 60 months, I would be shocked. So in 2027, or last call, he said by 2027, we'll do 1 million bots. At least that was the rough target. Now he's saying by 2030, we should be doing 100,000 bots a month.
Okay, wait. Explain that to me. Break down the numbers again. So it got worse or it got better?
It got worse in terms of the timeline. So he said he said Tesla's on the track for 1 million bots by 2027.
Yeah.
This time he said in 60 months, so 5 years from now, which would be 2030, he would be shocked if we're not making 100,000 humanoid bots a month, which would basically be 1.2 million. So he basically shifted it 3 years from 2027 to 2030, which I think, realistically, I don't even know if it's going to happen in 2030. But that was, I mean, one of the things I think people are hoping is that Optimus could be some type of a surprise. I think we got no update, no meaningful update from Optimus, other than, they're working hard on bringing it to the world, but it's not prime time yet.
Yeah. I'm surprised how under wraps this new cheaper model is and everything. It makes me not as hopeful. If they push that a little bit harder, I also think that that could expand the multiples or people's hopes in the company right now. But I don't know. Overall, what did you think about Google though? That was a lot less disappointing. I mean, the difference in Tesla stock down now 4.7%, 4.8%, and Google, which actually was dropping immediately once the earnings came out on free cash flow numbers, but turned around pretty quickly.
Real quick before Google, I do want to say the question about XAI, I was very disappointed in. I don't know if you feel the same, but when they said, hey, a retail shareholder asks, because they use Say Technologies, owned by Robinhood, by the way.
Yeah.
Tanner knows that already. Around, hey, when will Tesla investors get a chance to invest in XAI? And Elon's response was better than the CFO's response. The CFO was like, this is not the forum to discuss that. And I'm like, what?
Bro, that was so funny. The guy butts in to go, here, I can take that question. We can't talk about that right now.
Yeah, and to your point, the first 5 minutes of the call, Elon was touting about Grok.
Yeah.
So like Grok is from XAI, if I'm not mistaken. Second of all, Grok is going to be in Teslas, if I'm not mistaken. So Tesla investors that missed the opportunity to invest at 18 billion, 40 billion, 57 billion, and then 130 billion, and now 200 billion. 5 opportunities that XAI had the opportunity to get a Tesla investment. And one could argue, Tesla shareholders have been very patient with Tesla stocks, so being able to get exposure to what could be one of the biggest AI companies in the world. Yeah, this is the forum to discuss that. Or at least it's something where you don't spit in the face of shareholders and you can give a better response than this is not the forum, because obviously Tesla shareholders know that XAI is meaningful. By the way, XAI is taking away the time of Elon Musk, who's the CEO of Tesla. So one would think, hey, maybe as a shareholder, we get a little piece of the pie. I thought that was a bad answer, and I was turned off a lot by that.
But it's also why he's spending so much time there. He like someone brought up the question of him having a 13% stake. The truth is he has a major stake in these other companies that he's working hard for, and doesn't have to put up with the earnings calls and all the, like, he can just get to work. Like, as much as I'm an annoying shareholder, I want a certain outcome out of Tesla. It's got to be annoying to have every single person in the world critiquing every single good decision, bad decision. So for XAI, for SpaceX, for Neuralink, all these companies that are a little bit more under wraps, it must be easier to go to work every day. I mean, but
I agree. I will say the stock's down 4% right here. It's to levels we had last week, so it is what it is. But this is also when Tesla runs, right? And this is why this stock is so hard for people to get a grip on. Given everything that has happened this year, you would think the stock is like max 175, 200 if you want to be generous, but no, it's held up. So I think tomorrow when the market opens, investors are going to have to ask themselves, hey, at the end of the day, even if the call sucked, do we believe in Elon's autonomous vision? Because if we do, the street continues to pull forward that growth. I mean, I got a ton of upgrades this morning to 450, 475 for a lot of these analysts. Or was the call that bad? And is the lack of hope, given Elon did say there's going to be 3 crappy quarters due to the regulatory credits going away, enough to take this bad boy back below 250, which is what most people think it probably should be trading at. And time will tell over the next few weeks in terms of what we see on Tesla. Google. So let's start off with you. What were your thoughts on Google? You are a Google shareholder, and I think you like this earnings.
Yeah, no, I love this earnings for a multitude of reasons. I mean, mainly because the CapEx spend gets me excited for other positions in my portfolio, like NVIDIA. So that was just insane. But search is staying way ahead of what people thought it was. And it's not just pricing, it's also the amount of clicks that they're actually getting is still up. That was very exciting to know. YouTube is continuously doing well, and cloud is killing it. I mean, I don't know how the market will have to relook at Tesla as earnings or as analyst upgrades come out over the next week or so. And I think they are going to see a flurry of upgrades. A company that has been looked down at as a loser based on artificial intelligence and sort of search dying and everything like this, and just realizing, no, actually, that's not the case at all, and they have no reason to slow down their search growth. I actually think a lot of models are going to come out and show no search declines over the foreseeable future. There's no information that's showing that at all. So
yeah, That shocked me the most. My thoughts on Google were, to sum it up in one number, 11.7%. I mean, the fact that they almost got to year-over-year levels that were break-even with Q2 of 2024, which is 13.4%, when the street thought it would be 8.5 at best. I mean, that's incredible. And it shows that either search is not dead, or if search is starting to lose momentum, Google is figuring out how to pivot search into being monetizable via AI in terms of the different cohorts that they're testing with. And it's producing results, and it's producing real revenue. I mean, they did $28 billion in profit. It's just an incredible quarter. I don't think anyone can deny that.
Yeah, I mean, they're on track, as Steve would say. You know, he likes talking about the big numbers, but this is a $400 billion revenue a year business coming up. You know, like, this is insane. It's unbelievable. Hard to bet against that. Extremely cheap pricing versus the rest of the Mag 7s. You're getting a company that's in the heart of artificial intelligence, probably has the best way in terms of cost to serve, because they own their own cloud, they own their own distribution, they have some of the best models, the best talent. They should actually be one of the companies that's probably trading, you know, a little bit more aggressively, and yet the market is looking at it as the cheapest name and putting Tesla as the most expensive name in the Mag 7. I think that, you know, if I was an investor, I did the trade on Tesla over to NVIDIA, but I think a trade that it probably will work out going forward is Tesla to Google as well.
So you think people that are heavy in Tesla should trim and get allocated to Google here?
No. I think that people can do whatever they want with their own money, and you know, their time horizons, everything like this are not mine. But for me, going forward with new money, I'm going to be putting it in Google, not in Tesla. So I don't want to tell what other people what to do or anything along those lines, but I'm going to bet on Google here again. I'll probably put in another order tonight.
Was there any negative you saw to Google, or any like nitpicky thing, or you thought everything was pretty good?
I haven't gone through it, all the numbers, because it was just back-to-back calls. What I will want to look into is, you know, net cash provided by like their actual operating activities. Why was that so low? Because that happens before CapEx. I just need to look into some of the margins and stuff like this. I just haven't been able to have a look. And then on the side of that as well, I don't know if you also looked into ServiceNow, up 7%. Put that on the stock draft, baby. I'm telling you, my picks, dude, are on fire.
Hold on, let me pull it up.
Well, it's not going to show you after hours, but
Steve doesn't have a program for after hours?
no.
Okay, so I'll show it tomorrow then.
Yeah.
Okay, gotcha. The final question, CapEx. I mean, Broadcom and NVIDIA pumped on the increase of $10 billion. I guess that means AI is not going anywhere.
No, CapEx is going to continue to increase. Google up 70% year over year on CapEx spend, and that's going to be higher next quarter and the quarters after that. I mean, this is the people who are saying that they're bearish on AI. I just truly think they don't even know what they're talking about. The entire world is not spending and stealing talent at these 9-figure deals for individual engineers if they are not spending more and believing more that this is the next phase of technology. NVIDIA is going to be a massive winner. I'm not going to discount AMD or Broadcom or any of those guys. They're all going to do great. It's just holy demand. It's insane. I can't get enough, man. I can't get enough.
Well, you've been buying NVIDIA for like 8 years now, so you understand this thesis very well. And it's cool to see it playing out, dude. I mean, NVIDIA to $5 trillion by the end of the year. I don't think it'll get to 200, but if it does, I mean, I don't think anyone can be surprised. So, incredible stuff. Tanner, thank you for calling in, and we'll talk later this week.
Yeah, man. Thanks. Bye.
Later.
I will be buying Google later for sure. I mean, how do you have a call like that and suggest that you do anything else out of all the companies that just reported today and don't think positively? Like you don't trim your winners to water your weeds, you know, or trim your flowers to water your weeds. I'm not going to then, because Google's up and Tesla's down 5%, trim the company that's up 2% to feed into the company that is losing shareholder belief. Okay. I might have cracked early on the Tesla case in terms of me rotating out of that name, and I've been a shareholder for a long time, but keep disappointing people. Keep pushing timelines. Keep doing these things. You're going to lose that valuation. Don't water your losers. Yeah. I would just say Google's PE only at 20. It's a pretty decent buy versus Google at 130, something like that PE. 140 something. Don't trim your winners and water your losers. Don't trim your flowers to water your weeds or something along those lines. You guys get what I'm saying. I'm not going to sell the stuff that's working to buy the stuff that isn't. All right, ladies and gentlemen, that's been my show. I'll probably be back at 8 o'clock today, 8:30. We have another massive show after this, the Big Tech Frenzy. I'm going to be talking about a little bit more of Google and Tesla, but we also have major news from PayPal, SoFi, Robinhood, all of these other names that I want to touch on. So it'll be another busy night for me. But until next time, thank you all so much for watching. Really do appreciate your time, and bye for now.